All right, fantastic, man. And if you guys hear people that are talking and you don't know where they're coming from, it's because I'm multi-streaming. So right now I'm live on TikTok, Instagram, LinkedIn, Facebook, and Christian Mingles, baby. You know what I'm saying? Can y'all hear that noise? Can y'all hear that? Right. All right. So listen, it's gonna be fun, guys, because I like to bring a lot of good energy. Because here's the deal, guys. Like the reason why I like doing this stuff is because I think the biggest like so many people have a business ideas that they want to do, and they don't do them because they don't have the revenue to do it. So put a one in the chat if that's you, because that was me, right? So if I would have known what I know now, then I would have started a business a long time ago, because I had so many great ideas, but I just didn't know how am I going to get what is the easiest and quickest way for me to grow in the business, and how can I get the funding to do so. So as we're going through this process, I promise you, there's nothing. Look, I'm going to teach it as if my children would understand it. So as we're going through these things, I'm gonna back you guys into, if you have children and things of that nature that you guys want to put into business. I'm going to break down how you can do that and how you can hire your kids within your business as well. Okay, so the number one thing that we're gonna jump right into it, man. So put a one in the chat if you guys are ready to rock out with me on the ones and twos. Let me see if I can pin this link real quick before. Let me pin this link at the top so you guys can see me live on YouTube if you want to. Okay. All right, I just pinned my YouTube channel, guys. If you guys want to click on there and then show me some love, tell me how I'm showing up. Okay, I am live. Okay, and let's rock out, guys. I'm about to kick it like a sensei with you guys, and let's go through it. Okay, so number one, okay, the number one step that you need to do before you get a business line of credit is write a business plan. Okay, business plan. So as we're going through these steps, guys, make sure you put them in the chat. And the reason why I'm telling you guys to do this is because the biggest fundamental mistake that people do is they don't have a plan together. Now, the reason why they don't want to give you funding, let's think about this, right? And people overlook this stuff. Now, the reason why you want to write the business plan specifically is because of why. Why do you think you want to write a business plan? That is correct. Okay. So you want to establish the business plan first, because that's going to, if you can't do, I want everybody to put pitch deck, pitch deck, PITCHDECK in the chat. Okay. Now let me give you an example of what a pitch deck is. When you go to the bank, they're going to ask you these questions: what your business is, what problem that you solve, okay, and how much revenue have you created. So I'll give you an example. My name is Anthony Glenn. The problem I solve is I help veterans invest in real estate, and how I do it is through my education platform, through Winning Real Estate. Simple. The reason why you want to have this stuff established is because, think about it. When you go to the bank, if I was to say that I want to give you $100,000 check, what do you think the most important thing they're going to want to know? If you're going to pay them back, number one. And then number two, am I going to be able to find you? So as we're going through these steps and stuff like that, I'm not trying to insult anyone's intelligence, but I want to make sure that you guys understand how important it is to write your business plan. Here's what's going to be within your business plan. And guys, I'm going to give you guys a free business plan template so you guys could write it, because you should not be opening up a business with a plan. Because, okay, so your plan is going to include, number one, who you are. Okay. Number two, what you do. Number three, where you do it. Make sure y'all are putting this in the chat so people can catch up, because a lot of people are going to be asking this. Number four, what your mission is. Number five, what your vision is. The mission is what you do. The vision is who you're doing it for. Number seven is going to be a competitive edge, right? What makes you different? Why should I hire you to do what you do? Okay. And then you also want to know who your competitors are and your startup costs. Okay. And I'm going to break all of this stuff down. Don't worry if I'm going to. Okay. 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 Guys. Okay. And then, guys, Okay, no problem. And then, guys, what I'm going to do is I'm going to give you guys a good. My son is over here. You want to say hi, son? I'm on live, brother. Come in here because we're going to ask you some business questions too. Okay, later, not right now. Okay, so remember the business plan is going to basically the business plan. I'm going to give you guys a template so you guys could download it. So don't worry about not remembering what it is that what we're talking about because I'm going to give you the free business plan template so you guys can download the business plan. Okay, so don't worry about that. But essentially, the most important thing is that you have to have a plan. And the reason why is because it is statistically proven that 80% of people who write a plan down will accomplish that plan. Okay. So as we're going through these processes and stuff like that, if you guys have questions, remember, I'm going to answer the questions. But as I go through this, the plan is the most important thing. If you do not have a plan, you plan to fail. Okay. All right. And I'm going to put this in the chat. Okay. And I'm going to post a link in the chat so you guys could download the free business plan template. And then I'm going to go through it and I'm going to read what the template says, and I'll go through that stuff. Okay. And then inside that plan is going to tell you everything that you need to have so you guys can get started. Okay. So number one is your plan. Okay. Any questions about the business plan before I go a step further? Because once you establish that plan and you have that plan in place, when the bank, that is a working, breathing document. And the whole purpose of that plan is to make sure that when you're creating your business, that the business has a vision. Okay. All right. Any questions about the business plan? Okay. All right. So number one, okay, who you are. Let me write these down because I'm going off the head. Who you are. Okay. And you're answering these questions. It's very simple to write the plan and it doesn't take long. Okay. Number two, okay, what you do. Number three is going to be your mission and vision. Okay. Your mission is what you do. So let me give you an example. Okay. And don't overthink it, guys. This is something that you can do on one piece of paper and then you can expand how you do it. Okay. So the example would be the homie does music, right? Or he does content. He's a content creator. So what he does is content create. Okay. Who he is the Plan B's LLC. Okay. And then the vision is he does content to curate people to expand themselves in music, right? And then the problem that he solves is getting more creators in there, and they basically consult him on doing that. Every single person right now, put the word consulting in the chat. Consulting, consulting, consulting. This is very important. I'm gonna back into why this is important. Okay, so who you are, what you do, your mission is what you do. Your vision is why and who you do it for. Okay. Okay. So as we're going through these processes and stuff like that, right? Just jot down, take a piece of paper, open up a Word document, and as you build your business out, if you follow this template, it's going to help you guys structure your business correctly. Because as you back into this business plan is going to be a living, breathing document that's going to help you scale your business. The whole purpose of creating a business is to grow it so it can get so someone can buy it. Okay, right? No adding, no adding, no adding. Yeah, no adding. Okay, I don't want anybody to add anything right now. Okay, okay. So as we're going through this process and we're writing out the business plan, here's going to be the next step. So now I have my plan together. I already know who I am, what I do, why I do it, who my competitors are. Why do I want to know who my competitors are? Can anybody tell me why would I want to know who my competitors are, guys? That's right. That's correct. But bingo, 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 bingo. A lot of people are starting pride. You know the reason why you got Granny's hot wings and chicken. The reason why they go out of business is because they don't know who their competitors are. They don't know who the competitors are, and number one, and number two, they're overpricing their product, right? So you want to know who your competitors are and how you can deliver your product from point A to point B the fastest and the most efficient. Let me ask you a question, another question for you guys, and this is kind of going to tie in, and then we're going to get into the components of the 20 steps into getting into establishing yourself as a business. Okay, so does Apple advertise phones? Yes or no? Does Apple advertise phones? Nope. Does Amazon advertise? Does Amazon talk about their products? Does Tesla does exactly? Does Tesla advertise a pro? Does Louis Vuitton advertise their purses and the quality of the purses? What do they advertise, guys? Life, lifestyle, lifestyle. So as you're building your business out and you are sitting in front of a bank, right? Or you're communicating with people to get either a personal line of credit, a business line of credit, a hard money loan, any type of personal loans or anything like that. You have to be able to communicate why someone needs this product and how you're going to deliver it. So a lot of people think that they have to have this big grandiose idea to sell a product, and they don't necessarily have to do that. They just need to be the best known product is always going to be the best product any day. What does that mean to you guys? How does that translate to you guys? Best known product beats the best. Bingo, 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 guys. So as we're building this out, and I hope I'm not going too fast because I got a lot to talk about, and this is why your business plan is going to be the foundation of getting started. I cannot harp enough on that. And remember, don't let me forget to put the link in the chat so you guys could get into. Matter of fact, I'm gonna do it right now. Okay. Let me copy this link real quick, and then I'm going to show you guys. I'm going to give you guys a free business plan template so you guys can write it. And then I will have these documents to where you guys could download them for free. I'm not charging you guys for anything. All I want to do is get some love on YouTube. And then I believe that the more information that I pour into our people, the easier it is. If I could say one thing that's going to change everything, I'm going to do it. Okay. So let me do a quick room reset. Anthony Glenn, buy and hold investor out of sunny Southern California. I'm a vertically integrated business. I have 7 companies, all vertically integrated into one. Vertical integration means one company feeds the other. Okay. I have 44 doors, $32 million of real estate assets. And last year, our net profit was around 11.2 million, and I signed an 8-figure partnership with Grant and Elena Cardone Veterans Group last year. Okay, so everything that I'm saying is trial and error from what I had to establish. And as I'm walking through this processes with you guys, I'm going to show you guys how to set up a business from point A to point Z. Okay, so right now I'm going to pin in the link so you guys could get the free business plan template. Boom. Okay, there's a Facebook group right there. If you go in there, I just have my staff pin it at the top. All you guys do is download and write the plan. Okay, so let me go over the next step. So after I have my plan, okay, all right, the very next step that I'm going to do is I'm going to establish an entity. Okay, I'm going to establish an entity. You do not get the LLC before you do the business plan. Can anybody tell me why? Okay, need an objective. Okay, what else? That is correct. Okay, so Rowan, are you here? I'm going to ask you a question real quick. Okay, all right. So All right. So now I have a company. I create the company. Okay, who's that? Okay. Okay, thank you. All right. So let's just say that I wanted to I created a hair company. Okay, the hair company is called Unbelievable. All right. We're gonna make it fun and exciting, guys. Okay, Rwan creates a company, Unbelievable. Boom. She goes and she opens up shop. She's rocking out. Boom. She gets established. She goes on the Steve Harvey show. Okay, Steve Harvey has been buying units for her. Now we got the secret. Steve Harvey's been buying them hair units from Rwan for all of this time. Now, okay, she goes viral. Since she goes viral, right? All right. The homeboy buys a hair unit from her. Okay. And then he gets the mange. Okay. His hair starts falling out. Now, Dahome sues Rwand. Now, after Dahome sues, her company is in a S Corp. Or she doesn't have a corporate structure. What's wrong with that? What's wrong with that situation? That means all the revenue that's going in through her company, right, is going to her personal account. Therefore, if she's a sole proprietor, write that in the chat. SOLE proprietor. I'm going to break down the fundamental difference between an S Corp, C Corp, and an LLC right now so you guys understand it. Sole proprietor has a less amount of protection that you can ever get on any type of company. Okay. All right. That means that you're a solo entrepreneur. The liability is there and you cannot scale that. And business banks do not like lending money to sole proprietors. Okay. Because there's a lot of liability there. Now, the second one is an S Corp. Okay. S Corp. Now, she has an S Corp. Now, watch this, guys. When you file your S Corp, they're going to ask you a question, and the question is going to be, how do you want your formation to be? Okay. She's going to say, I want my formation to be, I want my formation of my corporation to be an S Corp. They're going to say, how big is your business? Okay, I want 100 shares and my company is $1 million. Okay. So if I have a company worth $1 million and I have 100 shares, how much is each share worth? Help me out, y'all. Very simple. $1 million company. I have an S Corp and I have 100 shares. How much is each share valued at? $10,000, right? Bingo, bingo, bingo. That means that each share is worth $10,000. Now watch this. Rawan gets sued, okay? The homeboy wins, okay? Because he's got burn marks on his head. So now the court awards the homeboy, okay, $510,000 in damages. Now, how much is the company worth? Remember, what did we say the company was worth? $1 million, right? So if my company's worth $1 million and I got sued for $510,000, is the homeboy a majority or a minority owner in the company now? He's a majority. So now he's a majority owner in the company. So what can the homeboy do? He can go in. He can become the majority owner of the company and then vote who out. There you go. Bingo, bingo. Now, guys, I'm not trying to insult anyone's intelligence, but this is how I teach. Okay. So this is the difference between an S Corp and a sole proprietor. Now, let's go to an LLC. Okay. Somebody do me a favor that's on the live right now. And I want you guys to Google what a charging order is. A charging order. A charging order. Charging order. What is a charging order? Somebody Google, tell me what that definition is. Somebody Google what a charging order is. Bingo. Now, LLCs have something called members. Everybody put that in the chat. And S Corp have shareholders. Now, the fundamental difference between a member and a shareholder is that the LLC has the highest level of corporate protection. So when you guys are structuring your business, okay, the fundamental difference is that LLCs and S Corps, right? S Corps have members. LLCs have members, and S Corp has shareholders. So when you guys are establishing your company and you want to take the tax benefits, you want to do business. You can file as an LLC, establish your business as an LLC, and then file your taxes as an S Corp. Okay. Now, does anybody understand why I said charging order and members? Everybody understand that? Put a 1 in the chat if that's as clear as mud. I want to make sure you guys got that piece. I'm breaking this down so when you're establishing your company, you know how to maneuver. Okay. And then when we get up to around 80 people, and let's see here. Let's see, how many shares do we have, the homeboy? Can y'all see how many shares we have right now? Okay. Once we get up to, I'll tell you what, once we get up to 50 shares, I'm going to give you guys, the code that I would utilize to set up your company. Okay. As you, the NAICS code that you're going to set up to set up your company. Okay. So now let's recap real quick. We talked about establishing your business plan. I put the link in the chat for you guys to get the free business plan template. All you guys got to do is go to the Win in Real Estate Facebook group, and I just pinned it at the top. If you go in there, it's free, guys. All you have to do is download it, okay, and then write your plan, okay? Step 2 is going to set up your corporate structure. Now, I'm not going to tell you what type of corporation to set up, but I am going to tell you the fundamental difference between an S Corp, LLC, and a sole proprietor. If you're going for protection, the highest level of protection is going to be your limited liability company over the S Corp, specifically because S Corp has shareholders, right? And LLC has what? Let's see if y'all picking up what I'm putting down. LLC has what? What does LLCs have? Members. Fantastic, guys. Thank you, guys. Ladies and gentlemen, I'm Anthony Glenn. I am, make sure you guys ping up. Shout out to the homeboy for setting up the room and all of the moderators. Make sure you follow them. I am going to be rocking out. Above my head, you will see the winning podcast. I am breaking down how to establish a business line of credit step by step. You cannot mess it up, okay? So now I'm going to give you guys a free business plan template because you showed up today. I'm going to give you the codes that I utilize. And then if we get up to, I'm going to make a big goal. Let's see here. When we get up to approximately close to 100 people in here, this is what I'm going to also do. I'm going to break down and show you the lines of credit for my kids. I have an 11 and a 12-year-old, and I'll talk to you guys about the bonuses. I'll show you guys how to put your kids in your business. Now, okay. Now let's get into, so you establish the business. Now you have a plan with the business. So I got my business plan written. I'm going to call an attorney, or I'm going to call LegalZoom, or whoever you want. I'm not going to tell you who you guys should set your company up with, but you have to do this step by step. As you're following these steps, right? And you're following these steps is going to keep you guys out of trouble. Now, before I go further, because we're going to talk about obtaining an EIN, and we're going to talk about opening up the business account, and then we're going to talk about the permits and license that's going to be needed. Okay. All right. So now, who has questions before I continue to rock out? Any questions so far? Not yet. I'm about to go over that. I did. I did. And okay, so the four types of And guys, click the link above my head if you guys want to give me a shout out on YouTube. I'm live on YouTube. So if you click the link above my head and say hello, I appreciate that because that's going to help my algorithm go higher. Okay, so as I'm rocking out, if you guys could do that, I'd appreciate it. And then you guys could say hi. Y'all could see me live and in color, okay, in my studio, my home studio. Okay, so there's 4 types of corporate structures. One of them is a sole proprietor. That's the one with the least amount of protection. The 2 is going to be an S Corp, okay? S Corp. 3 is going to be a C Corp. And 4 is going to be an LLC, okay? The fundamental difference is that, let me explain, okay? Because you guys can't see me, so I'm going to have to explain it in a way to where you can understand it. The whole purpose of setting up a corporation is for you to unlock contribution and pension plans. Okay, let me explain what I mean by that. When you set up the corporation and stuff like that, the IRS favors people who own businesses, number 1, real estate, number 2, okay, charities, number 3, okay. Those people get the highest level of tax benefits. Let me give you an example. Why do you think that corporations are favored by the IRS? Can anybody take a shot at it? That is correct. The reason why corporations get the highest level of credits is because they hire people. Okay, and what that does is that you're giving jobs, so that therefore you're what we call an employer. Okay, once you become an employer, who can you hire? You can hire yourself, you can hire your mom, your dad, your sister, your brother. Okay, and I want people to put this number in the chat real quick: $14,600. $14,600. $14,600. Okay. Now, did you know once you set up your company that you can hire your child in your business and pay them up to $14,600 tax free? So for those of you who are in here listening to this, this is not just about, now think about this, $14,600 for 18 years. Why would you need to get student loan debt? Right? So as we're talking about these things and I'm breaking everything down, guys, just make sure you're taking copious notes, because everything that I'm saying, I'm going to drive you to the IRS code so you can look at it. Okay. And then I'm going to talk more in depth about how you guys could establish yourself with business lines of credits and some of the hacks that you guys could do. Okay. So now let's go back to establishing the corporation. When you establish the corporation, these are the things that they're going to give you the highest level of business line of credit for. Number 1 is going to be a consulting company. Everybody put consulting in the chat again. Number 2 is going to be an education company. Number 3 is going to be a marketing company. Number 4 is going to be an ambassador company. Those are the 4 companies that banks like to give or extend credit to. Let me explain. Okay. If you set yourself up as a restaurant, do you consult? Yes or no? Bingo. If you have a real estate company, do you consult? If you have y'all catch my drift? I'm not going to beat a dead horse, but when you set up your company, you set it up as a consulting company, that's going to give you, now, everybody needs branding and marketing, right? So when you set your codes up, and I'm going to give you guys the codes real quick. Does anybody have any questions? I'm going to drop some codes. I'm going to give you 2 codes that you guys could use, 2 out of the 4 codes. As we're doing this, guys, please, please, please ping up, because I'm giving you guys these gems, and I'm going to break down why you should establish your LLC, S Corp, or C Corp. I'm not going to tell you which one. I'm just going to tell you the differences. And then once you establish yourself and you're setting up, your admin has to be bulletproof. Okay, because that is the reason, this is the purpose of you when you establish the company. Okay, That's a whole purpose of establishing the company. You want to get it so it can get money. Okay. And administrative part is where a lot of people go wrong at. Okay. Now, let me get these codes. Does anybody have any questions while I'm looking up these codes on my computer real quick? Yes. Mhm. Okay. Great question. Great question. Okay. So no, your company doesn't have to be the same. I would never create if you create here's another thing, guys. When you set your company up and you do a company name, you never want to set up your corporation the name of the business. Does anybody know why? Anybody know why? That's good. That's good. It's okay. No, no. Okay, if I had Anthony Glenn LLC, can they find me? Yes. Okay, so as you set up your company, thank you for that submission. Guys, when you set your company up, set it up as ABC Consulting. Now, let me ask you a question. When you go to the yellow pages, what companies are in the front? The A's, the B's, or the Z's? No, no, yeah, yeah. Okay, so yeah, yeah. Okay, CJ, thank you. So when you guys set up a company name, right? There's something called that's called a DBA. Everybody put that in the chat. DBA. Okay. That is correct, right? So when you set up your company name, if you want to be discoverable, make it either a B, or a C. Nobody's going to be looking for Zelda company, especially if if somebody came to you and they said, I am looking for a minority company to give a government contract to, right? You want your company name to be in the A, B's, or C's because they're not looking at, you want to be in the first couple of pages. Does that make sense? So it is statistically proven that companies with named A, B, or C, when Googling stuff, is going to pop up before you do. Now, that is the reason why you want to have your company name in the first couple of alphabets because you want to be discoverable. Okay. And this is stuff that a lot of people are overlooked. Now, doing business as, all you have to do to set up a DBA is you have your corporation, whatever it is. Don't make it don't make it your personal name. Make it either an acronym or something short. Don't put, my first corporation. Let me tell you what it was. Anthony Glenn the Second and Executives LLC. Do you think that's going to fit on a business card? Right. That's my first company name, y'all. So as we're setting up these companies and stuff like that, make sure that you set your company name up, and then you can file with your local corporate office, and then you can do a DBA. And a DBA is essentially, all it is that you have a company and you have a sub company, a sub company or a name that is doing business as your corporation. The example will be Tesla. I'm pretty sure Tesla is not incorporated. I'm pretty sure that Tesla has a company, S Corp, C Corp, or LLC, and Tesla is the brand. That is where people make mistakes at. Your brand and your company name is not the same. Okay. Your company, your LLC and your brand is fundamentally different. Put a one in the chat if you guys are following me. I want to make sure you guys don't get lost in translation. Now let me give you guys two of the four codes. I'm going to give them to you, and get your pen ready because I'm going to give you the codes that I suggest that you guys set up your corporation as. Number one is management consulting, 541610. 541610. This is how your company is identified. So when they give you a business line of credit, right, they're going to look and see what you do. Okay. The second one is going to be other management consulting. That's going to be 541618. 541618. Admin management consulting. And I'm going to break it down why this is important. And then I'm going to give you guys a bonus. The third one is going to be 541611. That's administrative and general management consulting. Okay. There's 6 more that I'm going to give you guys, but I'm going to tell you. Can somebody tell me why this code is important? That is correct, brother. And guys, remember, as we're going through this, yes, please. Yes. As we're going through this, guys, if you guys are enjoying the show, do me a favor, click the Winning Podcast up. I do these rooms every Tuesdays, Wednesdays, and Thursdays. Guys, I am breaking down and giving you guys the gems of how to establish a business line of credit. Your North American classification code is going to be how banks identify you to see if they want to give you credit. This is extremely important. When you call that person to set up your business, you're going to make sure that you have something like a consulting company, okay? Because when they identify you as a consulting company, your administrative stuff is already going in the right direction. All right. So now let's get to. Let me go to the next. So step one. What's step one, y'all? What's the first thing that I got to do? Write the business plan. Step two is I'm going to establish the entity. Right now, the LLC, S Corp, C Corp, LLC. I already told you why I like LLCs over the other ones. Okay, because LLCs have shareholders. No, S Corp has shareholders and LLC has members. Okay, so as we're talking about this stuff, guys, I am telling you guys why you want to have, and I like LLCs. Now, here's going to be the next step. Okay, this is going to be the third step. You're going to open up a business. Thank you. You're going to open up a business. You're going to open up a business checking and savings account. Now, listen to me. Before you start asking for lines of credit, there's some steps that you have to do. Now, the reason why you want to open up the business account with the LLC paperwork, right, is because the bank's going to ask you what you do, how you do it, all of that good stuff. And that goes back to what I told you guys to do first. What did I tell you guys to do first? Write the what? Business plan. Bingo. Because the business plan, when you go into the bank and you have an established business versus just walking in, because let me tell y'all a little secret. Did y'all know that when banks open up an account, they're going to look you up, right? So now we're going to talk about admin. Everybody put admin in the chat because I'm going to break down some administrative steps to do before you start getting. This is fundamental before you guys start looking to get lines of credit. Number one, have a phone number. Number two, now, just follow me because I know I'm gonna tell you now. This is a business phone number that somebody's going to pick up, not a regular phone number, a business phone number that somebody's going to pick up. Okay. Number two, get a brick and mortar. Now, you can have virtual brick and mortars. The reason why you want to have a brick and mortar is basically like a physical address, a physical location to where you can get mail and all of that other stuff. Okay. All right. Number three, a Google profile. Now, a lot of people are like, man, why is he telling us this stuff? Well, let me ask you a question. Would you lend money to a person that you can't find online? Yes or no? Right? So as I'm breaking this stuff down, I'm talking about the intricate details. Now, look how easy this is. Okay, boom. I get a Google profile. Okay, I'm gonna put this up here so you guys can see it. All right. Now, somebody tell me why I need to have a Google profile. Some of the reasons why I need to have a Google profile and a Yelp profile, stuff like that. That is correct. And right. And then what did I tell you guys to write in the beginning? The business plan. So guess what the plan is going to tell you to do? Get a Google profile. That's the reason why I'm telling you guys, and I'll keep driving you guys back and hitting this on the head over and over and over again. Because if I am going to lend you money and you're checking all of these boxes, because they have people in the banks that are going to diagnose your business, and then they got like a little checklist, and then they'll say, okay, does the person have a phone number? Okay, call it. Is anybody answering? Number two, does he have a Google profile? Number three, does he have a website or a landing page? Okay. Anybody know the difference? What's the difference between a landing page and a website? Bingo. Okay, so now what should be attached to your web to your what do you guys think that should be attached to your landing page? I mean your Google profile. I mean your website. I'm sorry. Your contact info, and maybe attach your Google profile to your what? Your website, guys. Now, look how easy this is. We got 64 people in here. Let's just say the homeboy started a business. And then I said to homeboy, I'm going to post my Google profile at the top, right? And then for those of you, if you got a business, put a one in the chat right now. If you own a small business, put a one in the chat. Okay. All right. If you got a small business, put a one in the chat. Okay. All right. All right. I see. Now, for those of you who own a small business, put your Google profile in the chat. No, put your Google profile. I'm setting y'all. And the reason, listen, I don't care what your feelings feel like today. I care about who you're supposed to become. Okay, now I just put my Google profile in the chat. Check it out. Now, if you notice, I got pictures. I have products in there. I have reviews in there. And guys, don't overthink it. It's 73 people here right now. If I have my Google profile ready, you guys always have to be ready. Okay. If you're not ready, okay. Think about it. If I walk into, just imagine this was right now, I'm a multimillionaire and you want to get funded for your company. Okay. Somebody with some courage right now, pitch your business to me in 2 minutes. Go. Come on. Anybody. Come on. Pitch your business to me in 2 minutes. Pitch your business. Pitch your business to me, okay? Where this is we're at a marketing event right now. I want you to pitch your business to me. Okay, you want $1 million from me. Okay, I want you to pitch your business to me right now. Go. Okay, so put a one in the chat for somebody who got some. That was actually pretty good, dog. Okay. All right, that was pretty good. That was pretty good. Okay, but yeah, sure. Let's James. I'm sorry. Sure, let's do some business together. Do you have what's your? How can I reach you? What do you have? I can take a look at. Okay, fantastic. What is your how much money that you're at? What does your profit and loss statement look like? What type of revenue do you have, and how much money are you asking? How much money are you going to give me, and what's going to be my return on the money that I have? Okay, and then what is the how much money do you need, and what's going to be my return? Is that reoccurring or just one lump sum of the return? Is it 5%? Okay. All right. So let me pause right there. Okay. So now the reason why now listen. Now he pitched a company, right? You always have to be it. Listen, I'm gonna tell y'all something. You never know when opportunity is gonna come. Okay. And that's the reason why I told you to have a plan. Does this make sense, guys? The reason why I'm telling you guys this stuff, because if you guys have a plan and somebody's ready, you gotta always be ready. Okay. Now I'm gonna tighten it up a little bit. Who was that? CJ. I love it. I love it, CJ. You did fantastic. Can I give a look? Can I give some improvements if you don't mind? Right. So okay. So anytime you do it, make look. Here's I always go back to two things: the mission and vision of your company, okay, and why you're doing it. When you're talking about anything you're talking about in regard to business, just keep it nice and simple, okay? What is it that you do? Okay. Who do you do it for? What problem that you solve? How we can partner. Keep it in four simple steps. That's it. Again, who you are, right? What you do, what problem you solve, how we can partner. Okay. If you tighten it up in a nice little box and a little bow tie, you did good, right? But when you tighten it up, because this is not he did it off the realm, I would give you like a 95, bro. That's like really really good, right? So when you tighten up that pitch, right, and you practice that pitch when you're in front of people, right? You got to make an impact quick, right? And then when you make that impact quick, you never want to close out the deal with exchanging information. And here's how I'm going to say, CJ, I appreciate your time. I'd like to get when will be a good time, weekend or weekdays, on how I could connect with you so we can review and have a more in-depth conversation, because this is where most people make. They have a pitch deck, right? And then they're rambling trying to explain their business. You didn't do that. You were pretty precise. I know you do government contracting. I know that you're a veteran, right? And then you want to partner and give me 5% over. You have 780K in revenue, right? And then you want to get me in the game. So I got the gist of that. So that was really good. But the problem that people have when pitching their company, right, is it's not in a tight little box. I just need the cliff notes, okay? And that's called an executive summary. Everybody put that in the chat. Somebody read what an executive summary is. CJ, did you want to add something before we move on? Oh, that was good. That was good. Okay, and guys, put a one in the chat if you guys are enjoying this conversation. I'm going to go through, guys. The reason why I'm stopping right here in the first couple of steps is because this is fundamental for getting funding. Okay, if you're not willing to do this, you don't need a business. Okay. Okay. And I appreciate that. And then remember the business plan template. Let me run through this again so you guys got it. Okay. Get your pen out real quick, and I'm going to talk to you guys about. I'm going to go through each individual component of the business plan. Okay. Number one is going to be your executive summary. Okay. Executive summary is a short documentation or section of a document that produces a business purposes. So at the very top, that should summarize that I can read quickly and tell me how I'm going to navigate through the plan. Okay. Number two is going to be your proposed name. Always do 3 of them. Now remember, your name needs to be A, B, and C. You can do Z, but your fictitious business name, your forward-facing name, which is what you're going to advertise at, needs to be something short that people can remember. Okay, I'll give you an example. All right, my real estate company is called the Liberty Group. Okay, my mortgage company is called Military Mortgage Group. If you notice, I'm military, so I advertise military, right? My nonprofit is called Veteran Homeowners Club. My media company is called Brilliant Media Geeks. Okay, my mentoring and coaching program for real estate is called Win in Real Estate, Wire. My YouTube channel is called Wire. And if you look at the merch that I have on, you'll see I have a merch hat, right? So I'm advertising, I'm a walking, why would I need to have that brand? Because the more that I'm consistent with my brand, the easier it is for me to sell my product. Now let's go over the mission statement. So you got your executive summary, you start with that. Number 2, you got your proposed name. You have to have A, B, and C. Number 3, you're going to have your mission statement. Your mission statement is what you do, your daily operations. So your mission statement is, I get government contracts. Okay. My vision statement is what problem that I solve and who I'm planning to become. So your mission is what you do. Your vision is who you're doing it for, what problem that you solve. The vision statement is your future objective of where you want your company to go. All right. Next is going to be, okay. All right. So which part? Okay. Mission is what you do. Vision statement is who you're doing it for. Okay. Now remember, guys, this template that I have, it gives you what it is, and then it's going to break everything down because I got a lot to get through. I'm just going to give you the highlights, the clip notes. The next one is going to be your local market conditions. This is basically what if I have a product for that sells for $10,000, okay, and then my competitors are at $8,000. That's why you want to know what your local market condition is. Is there a need for your product? Okay. Now, I want everybody to put this acronym in the chat real quick. Put STUD. 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 This is an acronym that I use to make sure that this is the economical factors when you're creating your business that you need to make sure that when you're building your business, you need to build it around these 4 economical things. This is what's going to make you money. Is your product scarce? Okay. Is it hard to get? Now, if you're consulting or if you had a product, what makes you unique in nature? Okay. Can your product be sold or can somebody borrow your product? The example would be Turo. Okay. People need to transfer that product. They're not buying your product. They're utilizing your product. That's called transferability. The U stands for utility. Is what I'm doing useful? Okay. And then is there a demand for your product? Is there a demand for my product? Now, so next we're going to go to competitive advantage. We're going over the business plan and then everything else is going to be fast after I get through this, guys. So just stick with me, guys, because this stuff is very, very critical. Okay. Now, your competitive advantage is basically going to say, why should I do whatever it is that I'm doing with you? It refers to the factors that allow your company, product, or goods or services be better or create a more efficient product to the consumer better than anyone else. Why should I utilize you versus going anyone else? Anybody want to answer that question that's on Clubhouse right now? Why should I use your product? For the business, come on, business owners, y'all should be speaking up. Why should I be using your product? Hello, hello, hello. Bingo. Okay, because my product, I am. Remember, what did I tell you guys to sell? If you should not have a business if you're not willing to talk about your product. Nobody's going to sell your product better than you. So when you guys go into the bank and you start communicating these things, okay, nobody gives a shit about how good your product is. They care about what it's going to do for them. Does that make sense? Put a 1 in the chat if you follow me with that. Because I think this is where people you have the greatest product on the planet, but I'm going to tell you right now, listen, your product doesn't matter if nobody knows about it. And that's the reason why you have to have a Google what? Profile. So people can know that you're not bull crapping and they know that your product is the best product on the planet. Okay. And this goes back to the plan. Now let's get through these things real quick. Okay. And I got a couple of other things and then we're going to open it up for questioning. Okay. Local market conditions, competitive advantage is going to be the next tenet in your business plan. Okay. And that's going to say who you are, what you do, why you do it, where you do it, when you do it, how you do it, and how sustainable it is. Okay. Recruiting and retention. How many people do I need in the business to get started? Okay. And I'm going to tell you 4 fundamental people that you need in your business. Now, did I say you have to hire them? No, you don't have to hire the people. But these are the people that as you grow, remember your business plan is who you want to become in the future, right? It's not who you are now. It's who you want to become in the future. Okay. So here are the people that you're going to need in your business. Y'all ready? Put a 1 in the chat if you're ready for the people that you're going to need in your business. Tax planner. Number 1. Number 2, a lawyer. Now, you don't have to hire these people, but you need to have them on speed dial in the event that you get ready to get them. Number 3, you're going to need a marketer. And number 4, you're going to need a bookkeeper. Okay. And then there's one more. Okay. A bookkeeper. No, tax planner, lawyer, marketer, and bookkeeper. Those 4 people. Now, the tax planner is going to make sure that your plan is good and they're going to keep you out of the IRS. Okay. And make sure that you're good to go. Your bookkeeper is going to make sure that your books are good so you can scale and grow the company. Your marketer is going to make sure that your company is loud, and your lawyer is going to keep you out of jail. All right. Now that's why you should start to plan with those people. Okay. At least have 2, a primary and a secondary. Call and consult these people. Hey, my name is Anthony and I'm starting up a consulting company for music. Do you do music? Yes. Okay. So I just want to sit down with you and see if in the event, what are some of the legal things that I should watch out for if we're getting that. That attorney is probably going to be one of the best investments that you make. And if you don't have the money, at least you can have a free consultation with that person and you know who to call if you have any type of issues within your company. Retention strategy is going to be the next one, and management structure and equipment and supplies. That's it for the business plan. And remember, I have that template so you guys can get on there and download it. It's a 3-page document. You can write it in a day. And if you have a company and you want to put it in ChatGPT, ChatGPT will write it for you. And let's go back to the business credit. Okay. All right. And then I'm going to open it up for questioning. Number one, establish the legal, write your business plan. Number two, establish a legal entity. Number three, get your employer identification number. Okay. Attorney will set this up for you guys. And when you set it up, instead of trying to do it yourself. Now, the reason why you want an EIN number, watch this, guys. How are EIN and SSN similar in nature? Does anybody know? Bingo, bingo, bingo. Okay. So now watch this, guys. And this, I'm going to tie everything in a nice little bow. Okay. I got my business plan. I have my legal entity. I open up a business checking and savings account so you don't commingle. Okay. I got my Google profile set up. I got my phone number set up, and I have my landing page, and I have my physical address. So now when I go to the bank and they look me up, now they can see that I have a structured business. Now, I want y'all to put 3 C's in the chat, and this is going to tie everything in a nice little bow so you guys could understand why this is important. 3 C's, 3 C's, 3 C's, 3 C's, 3 C's. Okay, Melissa, I got you. I see your hand is up. Okay, 3 C's. Credit, collateral, and capital. Credit, collateral, and capital. Credit, collateral, and capital. Watch this. I have collateral because I have an established company that I don't want to lose. I have capital because once I open up that business account, I'm putting revenue in the account, reoccurring. Everybody put reoccurring in here because this is important. You don't want to skip this step. Okay, think about this. I got $1,000. Okay, over 90 days, I'm going to put $250, $300 in there, reoccurring. What does that look like to the bank, guys? There's 2 ways you can. It looks like you have profit. Bingo. Okay, do you want to expand on that? Do you want to expand on that? Yep. Bingo. Okay, so some people like to say, most guys on TikTok and all of these other places, they say, "Oh yeah, write a check for 10 grand, drop your cojones on the table, and then they'll just give you what you want." Right? But think about it. I would rather have 90 days of putting money into an account, reoccurring the same amount. So now I have evidence that I can sustain that. Now, as we're doing this, I'm telling you guys how to build up trust with the bank. Does this make sense? So now I check the 3 C's question off. Do I have credibility? Yes, because they did research. They called my phone number. Somebody answered the phone. I went on the website. I looked and I saw because they wrote their business plan. I have a landing page or a website that drives revenue, and I can transact on the account to where people can transact with me. I have collateral because I have the LLC, and I have the EIN number, and I have multiple accounts with the bank. Okay, and then the bank's going to want to give me a BLOC. Everybody put that in the chat. BLOC, a business line of credit, because I have reoccurring history of depositing money into the bank. Let me do a quick room reset, and then I'm going to go through the next. Now, The rest of the steps are going to be quick, guys. Okay, but I want to make sure that you guys are taking copious notes. I'm walking you through the beginning of the movie to the end of the movie. That way you don't miss a step. If you're taking copious notes, put a one in the chat, guys. I want to make sure you guys are still rocking out with me. Okay. Fantastic, 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 fantastic. Now some of this stuff you guys have established business. We don't care where you at. What did I tell you that we care about? Who you want your business to become. Okay, these are the secrets that people did not tell me. This is the stuff that they did not tell me. Now I want somebody, as we go through this process, I want somebody to look this up for me. Somebody look up SEPIRA, maximum contribution. SEPIRA, maximum contribution. Sierra Echo Papa, IRA, maximum contribution. This is proof. Remember, now I want to ask you guys a question. What did I tell you guys that the IRS favors? There's four corporations. What else? Company, charities. Okay, so they favor business owners, real estate owners. Okay, they favor marketing companies. Okay, they favor people who own corporations, and the reason why they favor corporations is because if you have a business, you employ people, which creates more what? More people paying what? Bingo, bingo, bingo. Y'all got it. Okay, okay. Read it to me. Pause right there. Pause right there. What does it say? Say it one more time. Bingo. Employee. Once you establish an LLC, S Corp, or C Corp, what are you? Are you an employer or an employee? You're both. Both of both. Okay. Mhm. So that right, so that right there, guys, when you're looking at this, when you're establishing a business, why aren't they telling us to open up a LLC or a corporation? Because you pay less, you pay more taxes. Wake up. Look, listen, you cannot listen to this. Okay, so let's do a little bit of math. Can somebody give me a calculator? Because I get excited when I start talking about this stuff, guys. Somebody get a calculator right now and put you paid yourself on payroll $100,000. Okay. All right. Now, what is 25% of $100,000? Why? Okay. What is the max? Okay, so think about this, right? The max contribution to a 401k annually is what, 22.5? But the max contribution to a SEP IRA is $66,000. That means I can put $66,000 into a simplified employee pension IRA. Guys, the tax deferred. So when people are telling you guys to open up these corporations, they're not telling you the secret. This is why you want to open up a corporation, because the IRS allows you to invest more money for your retirement. Okay. So this is why we're telling you guys. Now, remember, what did I tell you guys to open up? A business checking, a business savings, and a personal account with the bank. Now, watch how the money flows. Money comes into the corporation. Money goes then down to your personal account because you are on payroll. What did I tell you? The four essential people that you need to have: a bookkeeper and a tax planner. Your tax, a lawyer and a marketer. Okay. Now, your bookkeeper is going to keep your books. That bookkeeper is the one who's going to make sure, and that tax. Now, what is the difference between a tax preparer and a tax planner? Okay. What okay, here it is right here. A tax planner is ready, aim, fire. a tax preparer is ready, fire, aim. Okay, you've already blew your wad by spending all of your money, and then now at the end of the year, you saw a TikTok video, and somebody told you to go out and go buy a G wagon. Okay, all right, that's that's a tax preparer. A tax planner will say, okay, here's something that we're going to do. Okay, every quarter we're going to see how much money that you have, and we're going to have a profit and loss statement. A profit is everything that you have coming in. Your loss is minus your expenses, and then we're going to have a balance sheet. And then at your balance statement is going to see how much money that you have at the end, so you can scale your business. So that's the reason why you want to have a tax planner, because that tax planner is going to say, hey, guess what? You set up your business, go to the bank, open up a simplified employee pension plan, put yourself on payroll, pay yourself $100,000, okay? And then we're going to put $25,000 into that pension plan, okay? So then now you're getting taxed at $75,000. Which one do you want to get taxed at, $100,000 or $75,000? Guys, now, yeah, now guys, yes, not necessarily, because the money you're taking distributions from your company, right? Your bookkeeper, your how you have your stuff set up. What did I tell you guys to do? Put yourself on payroll. That means that the money comes into the limited liability company. And who did I tell you guys to do this with? Anthony, come here. Okay. Now, remember, I told you guys that you have the ability to hire people within your company. Now, remember, you paid yourself on payroll. Your company made $100,000. What was the number that I told you that you could pay your kids? Tax deferred. I have two children. Now, follow me, because I'm going to break everything down for you guys, and I'm giving you guys the codes. Okay, Anthony, come over here. Okay, click the link above my head. Get on the YouTube channel. You'll see my little chicken. Okay? Anthony, come over here on the mic real quick. Okay, now listen. Anthony, what do you do in my company?
Me and my sister both advertise your socials. We have family business meetings that we fund.
Okay, and then what is the name of your LLC?
AG3's LC Consulting.
Okay, and then what was the last couple of meetings that we talked about?
We talked about FICO score, stocks, bonds. We talked about 3 different trading orders in stocks. Stop orders, stop limit orders, and I forgot what the other one was, trading orders, I think. And then we also talk about what a debit and credit card is. We talk about what interest is, things of that topic.
What's the interest?
Interest is the cost of borrowing money. Basically, there's this thing called revolving debt, in which interest is accumulated in your debt. The more you don't pay your debt off.
Okay, and then what's the difference between a credit card and a debit card?
A debit card is money that you deposit into a bank. It's your own money, and it multiplies by 1% every year.
It depends on what.
Yeah, the interest rate is. Yeah.
Okay, and then what is? Do you have property?
Yes.
Where your property is located at?
Milwaukee in California.
Okay, and and how much revenue did the other day? How much revenue did I show you that your company had? Do you remember?
I think $8,000.
Okay, no, it was more than that. That's the trading account.
Oh, like 42 grand?
Yeah, $42,000. Okay, so this is revenue coming in. So thank you. So this is revenue coming in from his own company. Now, if I pay my kid $25,000, now watch this, guys. Follow me with this, and then we're gonna go back to the portion that I was telling you guys about, right? So as we're discussing these things, right, when you're establishing, guys, we're almost at 100. Remember, I told you guys I was gonna share something with you guys. Okay, so we're almost at 100. We need 10 more people, guys. Listen, let me do a reset real quick, because I got a couple of more steps, and then we're going to open it up for questioning. Welcome to Plan B. If you guys are enjoying the show, I am live on TikTok, Instagram, LinkedIn, Facebook, Twitter, all at the same time, guys. Shout out to all of you guys that pulled up to the show. Appreciate you guys pulling up. I'm dropping hot chicken nuggets fresh out of the grease with all of my cousins, my nephews. Shout out to Teddy, Yoli, Rowan, Max Doll, everybody that's on stage, my brother Fashawn, CJ for being here, my brother in arms, all of the people that are on stage. I love doing conversations like this because I don't give a damn what your business is. If you follow these steps, you cannot mess it up. And every last one of you guys, if you're working for someone and you're a W-2 employee, all of you have an opportunity. You have an idea, right? It's time to get started. If you have a business, you don't even have to have it. Don't overthink creating a business. It's not that hard, guys, right? I'm telling you, the people who own, who create a business and they see it through and they start with the fundamental piece with creating the business plan and you follow these steps, you cannot mess it up. It is bullet dummy proof, okay? Now, let's go back to these. I'm going to give you guys a little a chicken nugget real quick. Somebody look up Augusta, like Georgia, rule. That's IRS code 280 Alpha Golf, AG, 280 AG. Somebody read what the Augusta rule is, and then I'm going to go back to these things, okay? I'm going to give you guys an example. Augusta rule. Augusta rule. So both my kids own real estate. They own companies. Now, the real estate prints the money. Their corporation helps them lower their taxable income, but I don't have to pay taxes anything under under $14,600. So I paid them $14,600. Right now, they both have $250,000 in the account. Okay, by leveraging these strategies. I will show you guys live on YouTube the Section 8 properties that have built over $250,000 a piece for each kid. You will not believe the investment that I'm doing from these strategies. Now, they have their own corporation. This is their company, not mine. So you can create a corporation for minor children. And I'm going to tell you how to do it. Okay? Somebody read what 288G is for me. Augusta rule. Now, let me explain. Who did I tell you guys was in my business? Remember, we're going back to that $100,000 company. This is where your tax planner becomes a monster at, right? So now I pay myself $100,000. The company made $100,000. I put $25,000. That gets me down to into my SEP IRA in the same business, the same company that I have. The same account that I have with the bank, I'm going to open up retirement accounts. Now, why are you guys going out and spending all of your money when you can have the money going into a retirement account? You're never going to get rich saving your money. You can only get rich by investing your money. So think about it. If I got, what was the 3 C's? What was the 3 C's, guys? Tell me what the 3 capital. So now I have my business checking account, I have my business savings account, and then I have my investment account with the same company. So what do I have for the bank to give me? What do the think you bank is going to want to give me? A business line of what? Credit. Because I have what? Collateral in an investment account with the same damn bank. This is the stuff that people ain't telling y'all, right? So think about it. As I'm growing and establishing my business, all of this stuff gets in alignment. Now, somebody tell me the holidays are. Give me 14 holidays right quick. Rapid fire. Give me a holiday. Easter. Okay, Easter. Okay, that's 1. Christmas. That's 2. New Year's. That's 3. Independence Day. That's 4. Keep cooking. Labor Day. 5. Okay, Veterans Day. That's 7. Thanksgiving, President's Day, Hanukkah, 9/11, Juneteenth. Okay, what about your birthday? What about your birthday? If okay, so think about it. You don't think that the government creates these holidays Think about it. What do you usually get during around holiday time? What? Time off to do what? Spend what? Spend money. Think, guys. Think. This is listen. These holidays are fictitious. They create holidays so they give you time off, and then usually, what do they usually have? Holiday sale, Labor Day sale, Christmas sale. Come on. This is to put money into. This is to put revenue into the GDP. So holidays are created for you guys to spend money. So what did I tell y'all about 280 AG? So who's in my company, guys? Who do I have in my company? My son, my daughter. So now, guess what? Watch this, guys. I'm going to come in for a landing, and then I'm going to go through the rest of the credit stuff because I know that's what y'all are here for, right? So now, Christmas. My grandmother is a member in my limited liability company. I think I need to have a business meeting around Christmas time. I just flew my mom in to my house, okay, for us to have a business meeting. Now I document the business meeting utilizing 280 AG. Now I have a corporate meeting at my house. At a meeting at my house, what do I usually need to have? Food? Entertainment? 280 AG, Augusta rule. Ladies and gentlemen, the rich has been doing this thing for years. Why y'all going out spending money on flying your mom and dad in when you can put them as members in your company? Yes, because now when you're doing these things, guys, and you fly them in, that is an expense to your company, lowering your gross revenue. So majority of this goes down as an expense if you thoroughly document it. Now this is yes, you get to now think about it. Now look, now watch this, guys. Now, guys, again, I am live on YouTube, guys. If you guys are enjoying the conversation, please click the link above my head and just say, click the link above my head. I need 10 hellos on my live right now, guys. So I know that you guys are giving back because I know for a fact that I'm cooking right now. Okay. And do we have any questions while we're doing a quick room reset? Guys, thank you so much for pulling up today's room. I am going through how to get a business line of credit, and I'm breaking down why admin is important and why a tax planner is important. I would rather for you guys to put $25,000 into a simplified employee pension plan, okay, and have that money grow for you versus you guys go out and go buy a G-Wagon that's going to depreciate right when you drive it off of the lot. Okay, I would rather for you guys to put your family members in your company, your mom, your cousins, your family into the family business. That way you can expense a majority of you giving. Why are you giving your mom? Did you know when you give if your mother is a member in your company, she doesn't have to control it. The revenue that goes to your mom is taxed at her tax rate, especially if she's a senior. The older that you get, you pay less taxes. Did you guys know that? Put a 1 in the chat if you guys knew that. So as we're talking about these things, guys, I'm talking about why you guys are doing this stuff. Okay, so again, until you get sued and you have to defend the position in the IRS. That's why I tell you guys to document everything. Okay, so if you're listening to me, I'm giving you the tax code. Okay, nothing that I'm telling you guys is not. This might seem foreign to you guys, but the wealthy have been doing this for centuries. You guys feel that it's not that you can't do it because you don't own a business. Okay, and I'm not trying to insult anyone's intelligence, but guys, listen, man. Nothing that I'm telling you, I'm not going to give you where to look it up at. Okay, so now. So let me go through the rest of this stuff. Okay, so you obtain an EIN number, you open up the business checking and savings account. The whole purpose of you setting up a corporation is to lower your taxable footprint and to put more money into contribution plans. Okay, now the next thing that you're going to do. Okay, so we're on step 5 now of setting up the business credit. Okay, develop a comprehensive business plan. We already talked about that. Now register your company on Dun and Bradstreet. Okay, Dun and Bradstreet. This is the next thing. Registering your company on Dun and Bradstreet. Does anybody know why you're doing that? That is correct. Now, when you get right now, when you establish Dun and Bradstreet and you register, it's essential for establishing your business credit profile. Now, your social security number and your EIN number or your TIN number is fundamentally different. So now the reason why you want to establish that, now, what did I tell you guys to set up? Google profile, website, all of that stuff is because you have to have that when you're setting this up. Because before they give you a Dun and Bradstreet, they want to check out your company, right? This is the reason why I'm telling you guys to make sure that you're following the steps, okay? Let me recap real quick. Number one, business plan. Number two, set up your corporate structure. Number three, get your EIN number. Number four, open up your business checking and savings and personal account and your pension and contribution accounts. I'm going to give you guys those accounts. Okay. All right. Number five, register. Number six, register with Dun and Bradstreet. Okay. That's very easy. All you have to do is just have all of your stuff established and then you register with them. Okay. Number seven, get your NAICS code. Okay. You should get that when you set up your account. That is your standard industrial classification and your North American Industry Classification Code. I already gave you guys three of them. What I would do. What now? Pop quiz. Here's a little bit of business trivia. All right. All right. Rowan, thank you. Rowan says she's going to cash app somebody $100 for the person who gets this right. The first 5 people. Thank you for that contribution. All right. Okay, so what's the codes? Go ahead and run them down for us. Mm-hmm. Bingo, bingo, bingo. Okay. So now I got my DUNS number. I have my NAICS code. NAICS code is what they call it. Okay. And then I already talked to you guys about step 8. We got a little ahead of ourselves. Setting up your business line, your phone number, and get a business phone line and domain, and make sure that that domain is professional. Don't have your business at Google, y'all. So when all you got to do is call. You can call. So whatever your company name is, if it's it should be yeah, unbelievable.com, right? So, and remember, .org means organization. .com means commerce. .net means network. So make sure you do the appropriate your tag when you're setting up these companies, okay? All right, .com is the most common one when you guys are. Yeah, next code. It's North American Industry Classification System. Okay. Yes, yes, yes. Yeah, but go. Yes, yes. We'll talk about that. That's you could discuss that. Okay, you guys could talk about that, but I'm just giving the wave tops. Okay, I'm not gonna go in depth over it, but you guys could cover that after I go through the steps. We'll circle back around. Put that in the chat so we can come back around to that because I got like a structure. If that's okay. Okay. Now remember, you got to have a phone number. Okay, that somebody's gonna answer. What else do I need to have? Let's see if you guys are picking it up. What else do I need to have? Physical address. Bingo. Okay. Now that's going to help people find who you are. Now, after you have an email address. Yep. Okay. Now here's something that now the next thing that you're going to do is obtain your starter vendor accounts. Now I'm going to take a break real quick and I'm going to ask, why is it important to, now remember, you have all of that structure together. You got reoccurring money coming into the bank. You've established credit, collateral, and capital. You have revenue coming in. You have a solid business plan. You got a pitch deck. Everything is straight, right? Now it takes me if I can do all of this stuff in sequential order. Now you want to start getting your starter vendor accounts. Okay. Now, let's see. For Sean, anybody want to talk about this and why they're important? Bingo. Everybody put Paydex score in the chat. The Paydex score is essentially how people identify if your company is trustworthy enough to be lended to. And the fundamental piece is making sure your admin is straight. So as I'm walking you guys through these scenarios, I'm making sure that you guys got everything. Does anybody on TikTok, LinkedIn, or YouTube, or Instagram, or Clubhouse have a question? Because the rest of these are going to be quick because we've already established the foundation. Okay, and a lot of this stuff is going to be easy to do. A Paydex score rating is from 0 to 100. Okay, and typically around 50, 40 to 50 is where people start, and it's Paydex, Peydex score. Okay, that's what that is. Yep, that is correct. And the reason why I'm telling you guys to do all of these things step by step is because this is going to make you stronger when you start applying for lines of credit. You don't want to just go in, drop 10 grand, open up an account, and then say, hey, here it is. You're doing this in sequential order. And if you do it the correct way, I would say 90 days tops, it will take you to get into a good Paydex score. And something could be as simple as opening up an Amazon account, stuff that you already have, and start ordering things and paying that stuff off. Then what is Amazon going to want to do? They're going to offer you a line of credit. Now, I'm going to give you guys a little nugget real quick, and this is going to be something that you guys could utilize, okay? All right. So there's a couple of other ones like Uline is a very popular one. And it's a whole bunch of distributors that you can start buying stuff from and getting those lines of credit. And then also when you start transacting with these people before you have a line of credit, they're going to have a history of your account. Okay. Does anybody have any questions about what we're talking about, guys? Office Max. What are some other ones? But Uline and Amazon are very common ones for a business startup. Yep. Yep. So now you've got your business line of credit, okay? Dun and Bradstreet, Experian, and Equifax business. You're good. So that's what Paydex. That's what builds your Paydex up, right? So you've opened up the vendor accounts, right? Now, so now I'm going to start applying for business credit cards. Now, listen to me, what I'm about to say to you guys. You don't need 1,000 business lines of credit. I'm sorry. Okay. You know how many I have for my companies? Okay. I only have, okay, each individual company that I have, okay, I have like four business lines of credit. That's it. So all of these people telling you to get 19 and all of that other stuff, at the end of the day, there's something called an amortization schedule. And when you guys are getting all of these lines of credit, the more stuff that you get, it's going to be more difficult for you. Typically, for Paydex, you only need to get your score up, you only need 2. That's it. And I'll give you guys the percentages of what helps your score go up. Okay. And guys, let me tell you a little hack real quick. Okay, so here's a little hack. Okay, I'm gonna give you guys something that a lot of people don't know. Okay, there's something. What are the two? What makes the biggest impact on your credit, on your lines of credit? Does anybody know? The age. Okay, here's a little hack for you guys. Okay, so here's something that I've learned that a lot of people don't talk about, and I'm gonna give this to you guys. Okay, so all right, so if I have a $10,000 credit card, right, and I have a $5,000 balance on it, what is my debt to utilization percentage? 50%. Now, watch this. I'm gonna call Ruan. She has a Uline account with me, and I have a credit card with her. That's called a revolving credit. Okay, revolving an installment is. I'm just now. Remember, I'm not insulting anyone's intelligence, but remember, I'm on YouTube, so I want to make sure that anyone looking at this will understand. Like what I mean. Okay, revolving credit. Well, somebody tell me. Somebody tell me the difference between revolving and installment. Okay, I'll break it down. Revolving credit means that your payment is based off of what you owe. Okay, so it can fluctuate based off of what you owe. That means that it revolves on how much your payment is going to be. Installment means it's a loan and you pay a fixed amounts over a period of time. Okay, so here's I want y'all to put these numbers in the chat. Okay, please put these numbers in the chat. 35% of your paydex score and your personal credit is going to be making on-time payments. 30% is going to be 30% is going to be credit utilization. 15% is going to be length of credit history. 10% is going to be variety of credit accounts. How many cards? That's the reason why I was telling you don't need a bunch of cards. It only affects you by 10%. And new lines of credit is 10%. Okay, let me do this one more time. Payment history, 35%. Credit utilization, 30%. Length of credit history, 15%. New credit, 10%. Types of credit is 10%. Y'all got that? Put a 1 in the chat if you got that. So now let me ask y'all a question. What is something that I can affect immediately that's going to have the biggest impact? Credit utilization. Bingo. Bingo, bingo, bingo. Now watch this. Watch this. This is gonna be gangster. This is some gangster stuff right here. All right. I'm gonna call Ron. I have a line of credit at $10,000. Ring ring. Ron, pick up the phone up. Hello, hell no. This is it. This is what is this? Acme Bank or what? Jack? Hell no. What's the name of your bank? What's the name? Hell no. She like hello, hello no. Yes. Hi. This is Anthony from Unbelievable, and I have a line of credit for $10,000, and I've had that line of credit for 8 years. I've been thinking about closing the credit line down and switching it over to a different credit line. What do you think the bank? What do you think that credit person is going to say? What can we do to save you? How can we keep bingo, bingo? How can we keep your business? Well, I, I, yes, yes, yes. Is there? Yeah, yes. X is offering, right now you're charging 27%. USAA and Navy Federal are charging 23%. I was wondering if you could, lower my interest on that and increase my line of credit from 10 to 20. Now, if I go from $10,000 to $20,000 and I have a $5,000 utilization, what does my debt to utilization go on the credit card? What's my percentage? It goes down to 25%. Bingo. Bingo. Yes. Yes, being able to negotiate and leveraging. You can jump in if I'm missing something. This is not the Tony Glenn show, because if you got something that you wanted to add, I'm okay with you guys adding it. So when we're talking about these things, right? What did I tell you guys? Your payment history is going to be 35%. So if you got good payment history over the last 24 months, then they're going to look at you and say, okay. And if you don't, and if you haven't been going over, the 50, if you're not maxing out the card every single time, right? And you've been paying the card down and you're keeping your utilization to around 25 to 30%. Okay. And you don't have like a crap load of new credit that you just opened. That's going to be because they got to check your credit anyway. It's going to be a hard hit. But once they reset, okay, then it's going to change. Um, but go ahead, jump in and answer. You can add to that if you want. Anybody else want to jump in and add value to the conversation? Because I got a couple of more. I only got three more things that we're going to talk about, and then we're going to wrap everything up in a nice little bow, guys. If you guys learned something today, put a one in the chat. Okay, we talked about a lot. Okay, did you want to add something, Sean, that I did not cover? Because I'm going to talk about this. Is what we're going to talk about in the next thing. Revolving and installment credit. We just talked about that. We're going to talk about your net 30 and 60 accounts, leveraging gas cards and microloans, SBAs, and we're going to talk about protecting your financial statements. And then that's going to be it for today. We only got a couple more things to cover. Go ahead. Okay, fantastic. Okay, so does anybody have any? I'm gonna pause for questioning because I know this is a lot of information. But guys, the replays are gonna be on YouTube. My camera just overheated, so I'm trying to get it cooled down. Does anybody have any questions why I am turning on the air? I don't know why it's so hot in here. Go ahead. Be back, y'all. I'm ready. All right, guys. Welcome back to the show, guys. We are talking business lines of credit. Guys, if you guys are enjoying the conversation, make sure you click the link above my head and just put something in the listen. You'll see the YouTube channel pinged at the top, guys. I would appreciate if y'all show some love on the YouTube channel. Just pop in and say hello. Okay, guys, we've been rocking out for the last 2 hours straight about lines of credit. There's nothing that you can ask us here that you're not going to learn today into this space. And guys, I do these rooms every Tuesday, Wednesday, and Thursday, 9:30 a.m. Pacific Standard Time. So I appreciate you guys pulling up on IG. Fabi, I just see you just pulled in. Shout out to Fabi out there in Florida. Okay, where you guys checking in at? Put that in the chat, guys. Where are you checking in from? Can you put your area that you're checking in from? What? Okay, we got Columbus in the house. Okay, what about TikTok? Where you guys checking in from? We got Georgia. We got Florida. We got Russia. Yeah, right. We got Brooklyn, Detroit. Okay. Texas in the building. Okay. Dubai. That's fantastic, man. New York. Okay. Well, guys, I appreciate you guys. If you're on TikTok, please bang those thumbs. Get me up to 10 more shares right now. I'm going to rock out. We're on the back end of creating a business. I'm going step by step on what you guys need to know. Let me tell you what you missed if you guys are just coming into the space. We talked about Paydex score. We talked about business plan. We talked about corporations. We talked about LLC, S Corp versus C Corp. We talked about IRS code. We talked about hiring your kids in your business. We talked about members versus shareholders, okay? Now we're going to be going over the last couple of topics that I want to talk about. And that's developing strong payment practices. Now, this is very, very important when we start talking about this and then doing projected financial statements. What did I tell you guys earlier? The person that you need to have, a tax planner and a bookkeeper. Those two people right there are going to work in complementary to each other, because these are the people who are going to talk about where your direction that your company is growing in. Okay. So now let's talk about this last couple of things. Let me see. Let me put this in the chat. Okay. Instagram. I just pinned the link here. Let me pin this real quick. So you guys, if you guys are on Instagram live, I appreciate you guys showing up. If you guys want to see us on YouTube and get the replays to this live, you will go on YouTube, and then this one, after I close out the room, this will be at the very top. And if you guys want that free business plan template, if you're on TikTok or LinkedIn, I know you guys can't see my screen, but if you go to TonyGlennii.com, that's Tony Glenn, 2 N's, 2 I's.com, you will see the YouTube channel and the Facebook group where you guys could download the free business plan template. Let's talk about these last couple of things and then we're going to wrap up, okay? Now, when we talked about applying for microloans and things of that nature, and we talked about installment and revolving accounts, why not leverage credit to do these things, right? So when you get an installment account and you get a revolving account, the installment account is going to be a substantial amount of part of your score as well. And we talked about the percentages when we were discussing what percent. But remember, 35% is going to be what? Let's see if you guys remember. What's 35% of your score? On-time payments. What's 30%? Credit utilization. Credit utilization. 15% is going to be length of credit history. So when you get the reason why you want to establish that credit account, because the longer that you have it, that's going to be 15% of your credit score. Okay. And then new lines of credit and types of credit use is only 10% apiece. So payment history and credit utilization is going to be the two that you can affect immediately. Okay. So when you guys are establishing your lines of credit, okay, and you're doing this, okay, and it says right here, I'm looking at it on my Paydex score, it says record of making on-time payments, portion of available credit that you're using, length of credit history, how long you've had the accounts active, variety of credit accounts, i.e., credit cards and loans. Credit cards is revolving, loans is installments, and new lines of credit, recent applications, right? So it's 10%, and types of credit is 10%. So one thing that you can affect immediately is going to be the utilization of your debt to utilization of your credit. Okay, so when you guys establish this, and if you guys go through that steps and you have everything good, it shouldn't be a problem. Now, a lot of people ask me, are they going to check my personal credit when I get a business line of credit? Put a 1 in the chat if you think it's a yes. Put a 2 in the chat if you think it's a no. What do you say, Fashawn? What's the answer? Yes, in most cases, they're going to check your personal credit. But that doesn't. Yes. PG is personal guarantee. Okay. So when you guys are doing this, but when you do no personal guarantee, what do you think you're going to pay more of? Interest. Okay. Which is the cost of borrowing money. And we're going to discuss I'm going to give you guys a formula to where you can see how much interest you're paying on each credit card. Okay. All right. So now, okay, I have what is a easy card that typically you can get for a business? When you drive, what do you got to put in your car? Credit card. Boom. That's like a micro credit card, right? Yep. Okay. So when you guys are thinking about microloans, right, and doing these things, the reason why I'm telling you to set up everything the way that I'm telling you to set it up is because once you guys are established, okay, and you do a Dun & Bradstreet number, and you follow the SBA, and you register as maybe a minority-owned company, ladies, okay, then you could possibly get something called grants. You guys know that there's billions of grants out there for women? Billions and billions and billions of dollars out there for ladies. I know. Right? So, right, right. So when we're discussing these things and I'm talking about these things, man, please, please, please do not follow these steps and do everything in sequential order. The reason why I'm telling you guys to do it in order as I'm telling you is because once you do it in order, you're not missing any steps. Because if you get the LLC and then you try to apply for a business line of credit and you haven't put money into the account reoccurring, or you don't have a Google profile and you don't have all of your admins set up, good luck. Okay. All right. So as you're doing these things, I'm telling you guys what to do and how to do it in sequential order so you cannot mess it up. Okay. Now, micro funding and grants and stuff like that will help you grow your capital also. Okay. All right. So it says, is it true that you can't get funding if your business is titled with certain things? Yeah. Well, it just depends, man. I mean, you want to make sure that you have a succinct business. Okay. And people don't have to figure out what it is that you do. Okay. It shouldn't be a mystery of what you do because your mission and vision statement is going to be on your website. Let me tell you what just happened with me with Navy Federal as I opened up another account with them. They went on my website and then they looked and then they saw I had to remove some stuff off of my website because they didn't want me to feel that I was a competitor. They asked me questions like, do you offer finance? Do you offer finance? Are you a finance company? No, I'm a consulting company. Okay, so I had to take the word finance off of my website. Yeah, there it is right there, right? So as I'm talking, and some of y'all I know right now you're feeling like I got on TikTok, it says I feel exposed. Well, the reason why you feel exposed is because when I'm trying to tell you I'm trying to listen. The best way to learn from someone is to follow someone who has done it. Okay. So all of this stuff that I have put together in sequential order is I'm making sure you don't make the same mistakes that I made as I was building out my companies. Okay. All right. Now, did you guys know that you can lend money from one company to another? So what do you need the bank for? Let me say that again. Did you guys know that you can lend money from one company to another? Like I can lend money to my real estate company, and my real estate company can the interest that I charge is a tax write-off to the company that I lent it to. Okay. All right. So, and guess what? If company A has a business line of credit, I can extend that line of credit to the other company. So, as I'm talking to you guys about this stuff, I'm going to tell you where to find it at. Okay. So now we talked about getting the micro loans, right? All right. Now let's talk about this one: net 30 and net 60 accounts. Okay. Have anybody put that in the chat? Net 30 and net 60 accounts. We already talked about step 15, which is apply for a revolving installment credit. We talked about considering net 30 and net 60 accounts. Does anybody want to tell me what those are? Net 30, net 60. Everybody put them in the chat. Okay. So tell me, explain it a little bit better. 30, okay, 30 and 60. Net 30. Go ahead, brother. Jump in. Who was that was speaking? There it is. That and you can establish these with suppliers who offer trade accounts. These are called trade accounts. Okay. So this is trade credit. That means that if I buy something from you, I gotta pay you in 30 or 60 days. Those are called net 30 or net 60. They give you basically more time to pay invoices and improve cash flow in your company. So now think about it. I got my business line of credit. I got my BLOC. I have credit collateral and capital because I've established my limited liability company. I have collateral. I have all of my admin stuff set up. I have my revolving account. I got my installment account. Now look, revolving account. Boom. Open up a Amazon account. Okay, a Uline account. Okay, installment account. Maybe I wanted to buy a printer. Instead of buying the printer, I'm going to finance the printer. Okay, and then I'm going to finance it with my business and pay the printer off in increments, right? And then I'm going to do IPP. Every single person put this acronym in the chat right now. IPP. IPP. Okay, I'm waiting. IPP. I better see. This is the most important thing that you guys could do. Interim principal payment. What does interim sound like? NB, in between. Now, I have an account. I got a 60-year. Okay, so let's do this real quick. Put a 1 in the chat if you guys want me to give you guys an example of this, because I'm gonna do this really quick. Can somebody help me out? Because I don't want to. I'm doing this off the top of my head, so I need somebody that can pull up a calculator and rock out with me. If you're on TikTok and you want to come up, okay, you can do that. I'm going to invite you guys to speak. But this is very, 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 very important. Hey, baby, I love you. Okay, I see you ain't coming in here to talk. Somebody, somebody help me out. Give me a calculator. Okay. Okay. Follow me with this, guys, and I'm gonna give you guys an example, and everybody should follow me with this. Okay. I bought two printers for my company. Okay.
Angie. Hi.
Okay. I got a printer. Somebody got a hot mic. Okay. All right. So, okay, not now. Let me see. Okay. Hey, thank you for coming to the stage. How are you? What's your name?
Angie.
Hi, Angie. Okay.
It's Angie. Can you hear me?
We can hear you. Can y'all hear her coming through on Clubhouse? Okay, Angie's from TikTok. Thank you for coming to the show. Okay. Angie, what's the name of your business? How long have you been rocking out with us right now?
From New York. Hi there.
Oh, okay. All right. So you've been rocking out with me.
Whew, well, I just met you. I just caught up to you today. Yeah.
Okay. Fantastic. Fantastic.
In Business Urban Roundtable. Yeah.
Okay, okay, fantastic. Well, thank you for coming to the show. And guess what? You are live on Instagram,
You're
TikTok,
welcome.
LinkedIn, Clubhouse, and Christian Mingles.
You're welcome. You're
I'm
welcome.
playing, I'm playing. Okay,
I'm honored.
okay. Well, thank you for coming. Did you have a question for us in regard to business that you'd like to ask the stage?
Now I've been taking a lot of notes, and I was just responding to your request that we join in from TikTok. That's it.
Okay,
No questions yet.
fantastic. Okay, so now since you came up to the stage, you're gonna be my example. Okay. Do you have a calculator
Okay.
that you can work with me on TikTok? Okay, you have a calculator.
Uh,
I'm just gonna make it.
on the phone. Yes. Yeah. I'm getting it up right now.
Okay, all right. So here's what I want you guys to do. Okay, I bought a $5,000 printer, but I did a an installment. I bought it on an installment. Okay. Now here's what you guys are going to do. Please follow me with this. Okay. When you buy it on your credit card, you're going to be paying more. When you buy it as an installment, you're going to be paying interest. Now let's do the credit card. Let's say that the printer was I'm gonna make it a nice hard number for you guys. It was $6,800. Everybody put $6,800. That's what I paid for the printers. Okay. $6,800. I'm going to do an installment. We're going to do the difference between an installment account and a revolving account. I'm going to show you two printers. Two printers, $6,800 total. Okay. All right. That's the number that we're going to use. We're going to do this as we're going to do it as an installment. So we're going to do it at 60 months. 60 months. Okay. The interest rate's going to be 9%. Okay. All right. Now, 9% is a pretty good rate on a business line of credit. Usually they're like 12 to 15%, depending, right? So now let's go back to this. Now y'all gonna follow these steps with me, okay? And I want you guys to just follow step by step, okay? And I'm gonna show you guys how much you're gonna pay in interest on that credit card at 9%. Y'all ready? Who's ready? Who's helping me on club? Okay, all right. All right. So you're gonna put 9. Now, if you're having a hard time, I'm doing it. I'm gonna do it. Click the link above my head, and I'm gonna show you guys. I'm on YouTube right now. For those of you who can't see, but just follow me with this, and then I'm gonna do it on my calculator. So the first thing that you're gonna do is you're gonna put 9 and then hit the percent sign. What do you get? Put the answer in there. You should get 0.09, right? Okay. Now what I'm going to do is I'm going to take that number and then I'm going to divide by. Everybody unmute your mic and say divide before multiply. Say it. So you remember this. Divide before multiply. Okay. Now I'm going to divide by how many months are there in a year? 12. See that number? This is the dirty little number that nobody wants you to see. Okay? That number right there. That's the bank. This is what the bank does. This is how the bank shows you, this is what the bank does. They don't tell you about this number. This little dirty number right here is a little secret number. Okay? Make sure you guys are looking at this. Okay? This number right here is going to determine how much interest you're going to pay.
0.75%.
0.0075. Now what you're going to do is you're going to take that number and then you're going to multiply it times what you borrowed, which is $6,800.
Okay.
How much you should get 51. Did everybody get that?
Yeah.
$51. $51 a month. Okay. Now let's just say this is on in order for me to borrow, okay, this amount of money, okay, I'm gonna pay 51. I'm gonna pay $51 in interest per month on that. Now, let's look at this and divide that and multiply that times 12. So I'm paying $612 approximately. $612, okay, a year in interest on that. This is just what you. This is what the bar. This is what the bank makes off of you. Now, I'm going to put a link in the chat for you guys to look at this, and then we're going to fact check what I'm saying. And then I'm going to close out. I only got 3 more things to talk about, guys, and then I'm going to be finished. But when you're looking at this, I just showed you guys how the amortization schedule works. Now, I'm going to see if I was correct. Let me see. BRETWISSEL. Okay. You'll never pay anything again the same way. Here, I'm putting it in the chat everywhere. Okay. Now, somebody click on that link in the chat that I just posted. Okay, I'm putting it all on here. Okay. Now, Fashawn, can you do me a favor? I want you to click that link that I just put in the chat. And you're going to fact check what I just said. And this is what I'm going to tell you guys what to do. Also, I'm going to show you guys how to. I'm going to give you what states that you can set up those LLCs for your children. And then we're going to go through the last 3 things that you need to do before for a business line of credit, and I'm finished. Yes, that's it. Okay, what does it say? Tell me what's the first. Okay, all right. So let's go through this, guys, and but make sure this is going to be the difference between. This is what's going to set you apart. Remember, I told you about interim principal payments. But let's talk about this because this is going to expedite your way to this is going to expedite your ability to pay off your debt faster. Okay, so right now the principal amount is what you borrowed. That's all that is. A fancy word for saying my loan amount, which is going to be 6,800. So put that in there. Payments per year is going to be 12. Okay, annual interest rate is going to be what do we say, 9%. Number of regular payments, you're going to put 60 in there because remember we're doing a 5-year loan. Yes. Okay, what does the next 2 fields say? 0. But leave those, don't put nothing in there. Now underneath that you'll see a box that says show amortization schedule. You see that? Okay, then you're going to hit calculate. Yep, click the box and hit calculate. What does it say? Okay. Okay, so it's okay. Now you remember the principal amount. Look. I'm going to pause right here because I want you guys to understand this formula. Because right now, what I'm doing is let's go back to it. The link is in the chat. Click the amortization schedule. This is very important because I have to explain why you have to. Why you're going to see how much interest that you're going to pay over the amount of time on this $6,800 loan at 9%. Okay. I have to show it to you. You have to look at it. Okay. So let's go back. Principal 68.00. 6,800.00. Payments 12. Annual interest 9. Regular number of payments 60 payments. That's 5 years. Okay. Balloon payment 0. Principal amount 0. Calculate. You should get $141 a month is what you're paying. Did you get that? Y'all get that? No, 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 no. You're doing the most. Do it. No, just plug in the fields. That's why we got the calculator. Okay, so what is a principal amount? Let's read the summary. What does it say? Principal amount says what? Okay, regular payments. What does it say? Okay, interest only payment. What does it say? So was I correct? $51. What I just did, ladies and gentlemen, and I showed you how to figure out what you're going to be paying in interest per month. Now, let's go all the way down. Now, let me show you. What does it say? Do y'all see the calculator? Right? I mean, do you see the actual where it says the first 12 months of payments? Can y'all talk to me about that, please? Right now, will y'all see that? Down at the bottom, scroll down. Guys, if you're just joining us, click the link. Okay, you'll see the amortization schedule. Okay, you guys have to see this. Okay, on payment one, what is the principal that you pay, which is what you borrow? What's the amount? No, it should be $90.60. Okay, so let me explain what's going on, guys, because I can't see y'all screen. But right now, in order, listen to this craziness, guys. On a $6,800 loan, I'm paying down what I borrowed, $90.16. But at a 9% interest rate, the bank is making $51 freaking dollars a month. So that means that, listen to this craziness.
More than half.
Yes. Yes. Did y'all see it? Okay. Do y'all want me to run through this again one more time? I'll give you one more example because I yes. If you guys listen, if you're missing this, please put a 1 in the chat if you're lost, because I got to make sure that everybody sees this, because this is the most important thing when borrowing money. I will run through this one more time so you guys got it and give another example. Okay.
Can you put the link in the TikTok?
Yeah, I can put the link in TikTok.
Thanks. I don't see it.
That's crazy, huh? Okay, so guys, okay, Angie, this is what I'm gonna do, man.
Yeah.
I'm gonna need you because I got too many screens going on, and I don't want to.
It's okay. I can go to
listen,
Instagram or Facebook. Or...
Yes. Go to TonyGlennII.com, TonyGlennII.com, 2 N's, 2 I's, and click on the Instagram. I'm live right now on Instagram. So you can see me. Okay. All right.
Okay, I'm on Instagram.
Okay.
Thank you.
So let's
be right back.
Let me give you another example. We're going to do another one, guys. I'm going to give you guys another example. Follow me step by step, guys, because if you will never, ever pay bills again the same way once you see this. Okay. I'm going to do it one more time so you guys don't. Let's go to a revolving. You put it on your credit card now. Okay. You put that $6,800 on your credit card. We're going to do an installment. Credit cards are anywhere from 26 to 28%. So here's the first step. What do I got to do? I got to divide before I what? Okay, so let's walk through it step by step. So you guys got this, okay? Because this is the big chicken dinner right now, guys. This is the mother of all gems, the MOAG, okay? The mother of all gems right here. I don't want you guys to miss this free game that I'm giving you guys right now. But guess what? I'm not going to give it to you until y'all get the shares up. All right, ladies and gentlemen, welcome to the Business Line of Credit Room. I am your co-host. Okay, I'm live on Clubhouse through Plan B. Shout out to the homeboy and Rawan for setting up this room. Rawan, I'll be saying it wrong. So I appreciate you guys pulling up and rocking out with me, guys. And I'm breaking everything down. If you missed it, you missed it, because I kicked it like a sensei and broke down everything for y'all. The replays is going to be on YouTube, guys. Do me a favor right now and click the link above my head, the Winning Podcast, okay, and show me some love, because I've been kicking it, and I know for a fact that people are not talking about this stuff and giving y'all this game for free. The only thing listen, I'm going to tell you the reason why I do this stuff. I know what it feels like to have an idea, okay, and being alone. I know what that feels like. I know what it feels like to go to sleep and go to sleep hungry, not knowing not knowing how I can get there. I know also what it feels like to feel like I'm behind the game. And I know what it feels like to be in a room with people that are bigger than me, that make more money than me, and I don't have the information. So the reason why I'm kicking this information and giving you guys this stuff for free is to help me get in front of more people. That's it. I'm not asking y'all to charge. I'm not asking for no money. I'm not asking for no cash app. I'm not asking for anything. I just need a bigger audience so I can share this information with people who don't have that don't have the information from the people, other families that was giving it to them. So I have to, God has given me this information for me to give it to you guys. Okay? Because holding on to it and dying with it is not going to help me. If I said one thing that could change everything that inspire you to get to business, you have zero excuse to get started now because you have the game. So there's no reason for you not to start a business because I'm giving you the blueprint. So now it's going to be up to you. And the question that I propose to you guys that are on the live right now, do you want your family to inherit your procrastination of starting a company? And if the answer is no, then you guys got work to do, okay? And I don't care if you're uncomfortable. I don't care about how big the room is. I'm going to give the same energy because I don't care if it's 1 or 10 people. Let me show y'all something and tell y'all something that's important, guys. If you're working a W-2 job and you're planning on your 401k, you're going to run out of money. You're going to run out of money. Okay? So if I could share something with you guys, I don't want your family to be a victim of your procrastination. So you have the information now. It's time to get started and to start growing your business. And I'm here, guys. Ask questions. I'm not going anywhere. Okay? All I'm asking for you guys to do is click and subscribe to the YouTube channel to help me get in front of more people. That's it. Okay? Now, let me prove a point real quick, and then we'll go through this amortization. No, I won't do it right now. Let's go through the 27%, and then I'm going to show you guys, and then I'm going to close out the room, okay? All right, and then we'll open it up for questioning. I appreciate you guys for showing up. It means a lot. All right, here we go. All right, same numbers. $6,800. Okay, that's going to be the amount that we're financing. Okay. All right, now we're going to do 27% because that's going to be the thing. So I got to divide before I multiply. So for those of you that are on YouTube, just follow along. Here it is, 27. Then what do I got to do? Hit the percent sign. What do I have? I'm going to pause until I hear people speaking. Hello, hello. Y'all still with me? 0.27, right? Okay. Now, what's the next step that I got to do? I got to divide by 12 months. This is the number the bank doesn't show you on your, have y'all ever seen this number on your bank statement? No, because that's the number this is how they charge you interest. This is what they ain't telling you. Now I'm going to take this number right here, and then I'm going to multiply it times $6,800. I'm paying $153 in interest per month. Now, let's fact check. Let's see if I'm correct. Okay, I'm going to put the link in the chat. I'm going to go back to the link in the chat. Okay, I'm going to post the amortization link in the chat so you guys got it. Okay, bam. Okay, now who's going to help me work out the amortization schedule? I'm going to put it back in the chat, and I want you guys to follow me. And then, guys, I'm done. I only got like 15 more minutes, so hang in there, guys. I know it's a long room, but I want you guys to hang in there with me. I don't want you to miss out on these last little nuggets because this is going to be very, very, very essential for you guys to do the rest of these steps, okay? All right, I just put the amortization schedule in the chat, okay? For those of you that are on TikTok, you guys are going to have to go to TonyGlennII.com, TonyGlennII.com, and go to the YouTube channel. I'm live on YouTube, okay? Now, who's going to be working my calculator? Fashawn, you got this one with me? Or who's going to work the amortization calculator with me? Okay, what is the first step? It says principal, right? 6,800. Payments per year, 12. Annual interest rate's going to be 12%. No, I'm sorry, not 12, 27. We said 27, right? 27 because that's the that's the average interest rate on your on your credit card. Number of payments is 60 payments because you're financing it for 5 years. Your balloon payment is going to be blank. Your payment amount is going to be blank. Calculate. Okay, so it says my principal. What's my no? What is my what? Now let's go down. Let's go to the summary. Tell me, read these numbers out for me, somebody, please. Bro, listen to that, guys. Now let's go down. Listen. Let's go down. Let's go down to the principal and interest where you see the first 12 months. Let's look at this, guys. And I'm going to talk to you guys about IPP and why this is important. Remember, IPP is interim principal what? Payment. Now watch this, okay? So now tell me what it says on month one. How much principal am I? Principal is what I borrowed. How much am I paying down on a 27%? What is going towards? So that means $54 is I'm paying down on what I borrowed. And how much is the bank charging me a month? Did y'all hear that, guys? Did y'all hear that? Did y'all hear that? That means that the bank, in order for me to pay down $6,800, I'm paying down $54 pretty much a month. And the bank is charging me $153 to pay down $54. Now go down. Now let me show you how interim principal payment works. Okay. So now listen to this. Okay. Now go down. Let's go back up. Okay. Let's say you bought a house. Put a 1 in the chat if you guys own a home or you want to own a home one day. This, what I'm about to tell you, is going to save you hundreds of thousands of dollars. Hundreds of thousands. Put a 2 in the chat if you guys want to save hundreds of thousands of dollars in credit card payments, car notes. You can utilize this strategy, the interim principal payment. You can do this with anything. Okay. Let's do this for a house at let's go $400,000 property. That's fair, right? Okay. Today's interest rates is around, let's go 6.5%. So right now, let's go 6.5. I'm doing it on my calculator. So guys, put a 1 in the chat if you're following me. You better be paying attention because I'm only going to do this one time. I'm showing you one time. One time is all I'm going to do. I'm only showing this one time. Okay. So right now, guys, if you don't have a calculator, you better get on the YouTube above my head, or go to the Winning Podcast and you can see me live and in color as I walk through this scenario. Okay. All right. And then I'm going to close out the credit stuff, but I have to show this to you guys as you get the credit cards, okay? And the lines of credit, okay? House note, the house note's going to be $450,000. Everybody put that in the chat right now, 450? 450,000? 450,000. Everybody put that in the chat right now, 450. 450, okay? Because I'll forget the number. That's why I'm asking you to put it in the chat. All right. House note, okay, we're going to go 6.5. Now I got to divide before I what? So I'm going to divide by 12 months. Okay, so now I got 6.5%, right? Turning into a decimal, 0.065. That's what I got. 6.5, hit the percent sign, you'll get the decimal point. Now I got to divide by 12 months. Now I get that 0.00541, whatever. Y'all see? Are y'all with me? Who's with me? Okay, now I got to multiply times $450,000. So who's making the money? Are you paying? Look. What's the number that you got? Did you get 2437.50? Put that in the chat. Put it in the chat, 2437.50. Now let's go to the amortization schedule and let's see what this looks like on a $450,000 property. Who's got me? Who's got my back? Okay, all right, all right. Okay, so now what's the first field? Somebody tell me. That's what I borrowed, right? 450,000. 12 months, regular payments. What's my interest rate? 6.5. Okay. Number of payments 360. That's 30 years. Balloon payment and payment amount is going to be blank. Hit show amortization schedule. Make sure you click that box. So balloon payment and payment amount is going to be blank. Hit calculate. Okay, somebody go to the summary and read the summary out for me to make sure that you guys are picking up what I'm putting down. That's correct. bro, bro, listen to me. If you, the lender is making $573,951.60 off of you borrowing $450,000. Now, listen, bruh. So, guys, listen. This ain't even the juicy part, guys. Right now, give me 10 more people on the stage. How many shares do we got? How many shares do we got? 33 shares after all of these gems. What the hell? Listen, get us to 50 shares right now, guys. Right now, get us to 50 shares because I'm gonna show you how to avoid paying this interest right now. I need 10 more people on stage right now to interact with us, and I want shares up to 50 right now because I'm not gonna give this game if y'all ain't sharing. That means y'all just getting all of this game for free. I'm showing you guys how to save hundreds of thousands of dollars, guys. Like this game right here, you're not gonna get for free. People pay me $25,000 to show them this stuff. I'm giving it to you for free. Come on, let's go, y'all. Okay, it's all good. As long as I get the shares to 50, I'm gonna show you this game. Okay. All right. So check this out. Now keep scrolling down to month 1 through 12. Here's the game right here. Here's gonna be the little chicken nugget that you guys are gonna miss. That you guys need to know. And then when you see this with your own eyes, then you're gonna be like, I'm never paying bills the same way again, ever. The green line, 233. I see the green line, 233. I don't know. That's a good question. Oh, that's the break. That's the break. The green line is the break even point. That means where that's the break. That's the break even point. So the green line right there on month 233, what you see, that means that's when the interest, you start paying the same amount of interest that you pay down in what you borrowed. That's a more principal starts to go towards the more you're paying down on the loan. Listen, principal is an easy way to say a loan amount. That's all principal is. They jumble up these words so they can confuse people, borrowers. But really, it's 360 loans. It's not 360 payments, guys. Now watch this. Let me prove it to you guys. Go down to month 1 through 12, guys, and listen. If you're not paying attention to me, guys, I'm telling you right now, you'll never ever pay loans or credit cards or cars the same way. Follow me with this because this is going to be the mother of all nuggets right here. Go to month 1 through 12 right now. Okay. How much principal are you paying down in the first month? What you borrow? $406.81. How much is the bank charging you to pay down that amount? $2,437, guys. The bank is making $2,437 off of you paying down $400 of your loan amount. Now, Everybody put IPP in the chat again because I'm going to show you guys how to skip paying interest. Okay? Interim principal payment. What does interim mean? In between. What does principal mean? The amount I borrowed. What does payment mean? That means you're paying before the loan is what? Oh, here we go. 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 Okay. Now, go down to month 12 and then tell me what it says on cumulative principal. All that means is that all of the amount of money that I paid towards the loan that I borrowed, which was the $450. What does it say? Month 12. And what does the cumulative interest? How much did the bank make off of you at month 12? So that means that the bank, I paid down $5,000 and the bank made $30,000 off me paying down that $5,000. Now, here's what I'm going to tell you guys. Listen, listen. When I write a check, okay, for $5,029, after, everybody say after I close on the house, I skip paying the $29,000. Do you get that? Okay, all right. Are y'all with me? Put a 1 in the chat if you're with me, guys. You cannot miss this, okay? Stop negotiating your property down. If you're going to get credits or money from the seller, get it as a principal gift. Everybody put this in the chat, principal gift. Somebody Google what a principal gift and put housing, put principal gift and put housing behind it and tell me what it says. Now, you guys don't know about this because the ultra elite know about this stuff, but you don't know about it because they keep you in the blind. Somebody tell me what a principal gift is. Okay, now put house behind it. Principal gift, like principal gift payment, housing. That's the wrong. That's a different definition. Okay. And right there. That's it. Now what? Now follow me. What this is. Let me explain what it is. Instead of negotiating $10,000 off of the purchase price of the property, okay, let's just say, okay, all right, the property is been on the market for $450,000 property. The house has been on the market for 90 days. I want to ask for a price reduction of $5,000. That only saves me around $30 a month in payments. But if I got a $5,000 principal gift, how much interest does it save me on the amortization schedule? $30,000. Let me say it again for the people. Let me say this one more time. Okay? You got to get this, guys. If you're confused, you better ask questions because right now I know 100% nobody right now on Clubhouse, TikTok, Instagram, nobody is talking about this. Okay? Okay. Yes. Okay. I close on my property. Who's on the amortization schedule right now? Still? Okay. If I got a principal gift of $10,000, On what month does $10,000 show up on cumulative principal, which is the amount that I paid down? How much money does it save me in interest? That is correct. Yeah, I don't think y'all got. I don't think you. I don't think y'all got this. I, you gotta listen, listen. Hold on just a second. I gotta make sure that you guys please put a 2 in the chat if you do not understand this, guys. I'm showing it to you. Okay, you cannot miss this. This is very important because this can apply to car notes, credit cards, anything. When you do an interim principal payment, they have to apply it to what you borrowed. Okay, so that means if I got a $5,000 credit card and I put interim principal payment, that means that they have to apply it towards what I borrowed versus charging me interest on it because it's in between. It's before my monthly payment is due. Now, let me do it again. That's it. So right now, go down to, okay, I close on my property. I'm in my property. I get a $10,000, I get a $20,000 credit for taxes for owning that property. Somebody show me where where $20,000 is on an amortization schedule that I'm showing you guys and how much interest. If I pay $20,000 towards the $450,000 loan in lump sum, a $20,000 check, okay, where does $20,000 show up at? How much money does it save me? Did y'all hear that, guys? Did y'all hear that? A $20,000 check will save me $104,000 of the bank charging me interest. I hope you guys got that, man. I hope you guys got that. Yes. But you have to write a check and you have to, because put a 1 in the chat if you guys ever wrote a check early and then they held on to it. It didn't hit your account until closer to the pay time. Put a 1 in the chat if you've ever had that happen to you guys. So essentially what they're doing is the reason why they're doing that, the reason why they're doing that is so they can charge you on the unpaid principal balance for it, guys. That's why they want to get it closer to your payment day so they could do what? So they can charge you interest on the unpaid balance. That's why. That's why they extend homes out to 30 years because they make a lot of them. Look at what the bank is making. Okay. So guys, let me wrap it. Yes. Yep. The longer your loan is, the more money the bank makes. That's the reason why they do 30 years on a home. Okay. So now let's go back to the last guys. Put a 1 in the chat if you guys are still here with me, guys. Hey, the homeboy, man, we've been keeping around 90 people in the space the entire time, guys. So y'all waiting for the last and final nuggets? Okay, let me give you the last nuggets real quick, and I'll run through these real quick. We talked about net 30. Okay. Next one, we talked about leveraging gas cards and store cards for that, right? You can get gas cards and store cards like Uline, Amazon to build your line of credit. Okay, we talked about applying for microloans and SBA loans. We discussed that. That's number 17. Okay, number 18 is going to be seek alternative financing options like crowdfunding and angel investors to raise capital because you're going to run out of money if you're trying to do it all with your money, right? So that's number 18, seeking alternative finance options. Okay. So when you guys get your line of credit and stuff like that, bring on investors. So you're not, and then give them a cut of the profit. And then guess what? When you bring on partners in your company, the number one mistake I made when building out my business line of credit is I didn't partner with people fast enough. Now think about it. If I hire Fashawn and I said, Fashawn, I'm gonna pay you $350,000 a year, right? And then he's gonna leave because somebody will pay him $400,000. But if I said I'm gonna offer you an opportunity to make money infinitely on us growing the company together, he is a stakeholder in the company. That means that he's gonna benefit from helping me grow my company out. Yep. No, no, no. I got to knock because we've been going for two. I'm going to close out real quick, and then use projected financial statements. Okay, so you always when you go to into the bank, they're going to ask you how much is your company worth. You tell them $5 million. You don't tell them where you're at. You tell them where you plan or anticipate to grow at. Right. So when you're doing these loan applications and you have a company, they're not going to ask for your. They're gonna, they're gonna, when you apply for that, they're gonna ask you, hey, how much projected revenue are you gonna have? Go big. They don't know how they can't project how big your company's gonna go, but they see the reoccurring money that goes in there. They have evidence that you're an established company. If I was to convict you of being a multi-million-dollar company, is there enough digital currency online to convict you of being or projecting that you're going to grow into a big company? That's why it's important to have a business plan and a tax planner, because that tax planner and that bookkeeper is going to be able to scale your business. Now, let's talk about scaling. What does scale mean? Can anybody tell me what scaling is? Scaling. Well, you cannot. Okay. Scaling is also reducing spending. Okay. Scaling is not just about growth. Scaling is also identifying where your company is hemorrhaging money, okay, and where you can streamline the processes. The example would be, remember, I told you you're going to have a tax planner and a bookkeeper. That bookkeeper should be giving you quarterly, hey, your tax footprint is going to be around $30,000. So right now we need to put more money into your retirement account so you can lower your taxable income. Or maybe you can do the Augusta rule. What is the Augusta rule? What did I say about the Augusta rule? Who remembers? Go ahead. There you go. To lower your taxable footprint, right? So again, these are things that people now somebody look up the what is the maximum amount of money I can put in a defined benefit plan. Somebody tell me what that is. Defined benefit plan. Defined benefit plan. Can I put 1099 income into okay, so 1099 and W2 income. So remember, you're hiring yourself. A 1099 income is an independent contractor. So yes, you can invest in pension and contribution plans. You're going to get taxed on your actual income, your realized income. That's 285,000. Read it what it says, bro. Listen, you can put $265,000 into a defined benefit plan. You can put $68,000 into a SEP IRA, but you can't do any of this stuff unless you own a what? A company. So that means that's $300,000 plus the 14,600 per kid, right? Plus the 401k 22,000, plus your expenses. You understand? This is the reason why you set up a limited liability company. It's not because you want to just have this fancy business. It's to lower your taxable footprint and maximize your investments. So now let me talk about the rest of this. Okay. All right. We talked about why it's important to establish strong payment strategies. Now, everybody, I'm going to cover this, but your homework is to. This is what I want you guys to research. I want you to research a shelf corporation. Anybody know what a shelf corporation is? Shelf corporation. This Okay. So a shelf company is it's a pre-existing business entity that you can fast track credit building, but it does come with a risk. But you're going to do your own due diligence. But I want to cover that. That's one thing that you can do that can help you build business lines of credit faster. Is establish a corporation that already has a shelf life. Encumber. Yeah. Okay. A paydex score. Yeah. So and guys, and guys, put a one and put a one in the chat, guys. Put a one in the chat, guys, if you guys enjoyed this conversation, guys, because we went through step by step on how to build a business line of credit. We went step by step on how to do this the correct way. And guys, I wanted to wrap up something now. Let me tell y'all something real quick before we open it up for questioning, because I got a couple of things. I want everybody to do this little exercise with me, and I want to show y'all something. And this is the reason why I'm doing this stuff. Okay. Okay. Somebody Google what the average social 401k is. Okay, so let's do some math real quick. This is going to be simple. Okay, K through 12 is 13 years, right? You graduate at 18 years old, you go to school. So what is 18 plus 4? Okay, plus another 3 years of grad school. That's 20 years, right? Okay, so now let's go to, all right. So now you're 25, you graduate, you're 20. Let's just say okay, so I went through, okay, so I went to school at 5 years old. I went for 13 years. That's 18, right? Then I go 4 years. That's 22 years plus another 3 years. What am I doing? 18, 19, 20, 21, 22, 23, 24, 25. Yeah, 25 to 27, you're in your career. So let's go 25, let's go 26 years old. When are you able, because does anybody know when are you able to start drawing Social Security? Does anybody know? 59 and a what? 59 and a half. So let's go 60 years minus 25 years. You're working for 35 years. Everybody put 35 years in the chat. This is going to be a wake up call for everybody that's on this live right now. You better be paying attention to this, because this is going to scare the living hell out of you. Okay. So that's 35 years in the workforce, right? I retire at 60 years old. I want to live to 60, 70, 80, 90. I want to live for 30 years. Okay. Now, somebody Google what is the average 401k savings at 60 years old. What is the average 401k at 60? Okay, right here. 200 the average 401k balance for 55 to 64 is $244,000. So let's just go a nice round number. Let's go 250. Okay? Yes, bro. Yes. Let's go 250. Let's go 250. You got your 401k? All right. Put a one in the chat if you ever heard of a 401k. Okay. Now, guys, if I disappear after this live, you already know. You already know what's up. But I'm gonna kick this information for you guys. Okay. Now let's go 250,000. You want to live for 30 years, right? That sounds like $250,000 is a lot. Put a one in the chat if you believe 250,000 is a lot of money. Let's divide. Let's watch this. Watch this, guys. This is going to be a wake up call for y'all. Okay. 250,000 divided by 30 years. This is just simple math. I could pay myself $8,333 per year. Now let's break this all the way down to 12 months. I can pay myself a whopping $694.44 a month. No, 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 no. Let's go one step further. But I got my Social Security. I'm gonna get my Social Security check. Okay. What is the average SSI payout for a 60-year-old in America? Okay. Now, you guys are going to do your own homework, man. If y'all not listening, at age 60, the average retirement, what do you guys get? Did y'all Google it? Okay. Right here, it says Social Security offer monthly benefits. As of 2024, the average check is $17.83 plus $17.83. Okay. $2,400, $2,477. You got $250,000 you saved up. You plan to retire at 60. You draw on Social Security. You can pay yourself a whopping $2,477.44. You're going to be working until you freaking die. Now let's multiply this times 12. That's a whopping $29,729. That's $30,000 a year. That's your 401k, and that's your freaking Social Security. That's what you can pay yourself. $30,000 a year. So guys, listen, man, if you don't know that listen, if you're not aware that people are working until they die right now, that's why. They're thinking that, oh, I got my 401k in the sky. I'm going to depend on Social Security, and then I'm going to be good. Right? So think about it, man. It's a race to have something that prints money. This is the reason why I tell you guys, the only thing that prints money is a business and real estate. That's it. Nothing else. Okay? Because the business prints the money. Follow me with this, okay? I want y'all to put 5 in the chat. Put a number 5 in the chat, and I'm going to wrap up, guys, and I'm going to open it up for questions so you guys can see this. I know it's quiet as a church mouse. I hate that. I know that you guys are like, what in the hell, man? This is scary as hell. It should be. And the reason why I'm telling you guys this stuff is because you got to wake up, man. Okay? You're going to have to, you're not going to, look, you're going to have to invest. Did you guys know that 401ks charge y'all? Did you know the money that you're putting in there, the 401k money they're charging you, there's a fee to 401k? It should be heavy for y'all, man. But I got to bring you the information so you understand how to move around it, guys. If you're not paying attention to this stuff and you're getting up, going to work, killing yourself, and they're taking a majority of your money for your Social Security, every time you get paid a paycheck, Uncle Sam is taking money out of there and they're putting it into this 401k broken system. Okay? And guess what? Put a 1 in the chat. Can you make a certain amount of money with the 401k or not? When you have a 401k, is there a ceiling on how much money you can make? Somebody Google, is there a limit on how much money you can make with a 401k? Who that? Oh, what up, AO? So guys, as we're talking about this stuff and we're kicking this stuff, guys, like, right? When we're talking about this stuff, there's a certain amount of money that you can make with the 401k. Is there an average limit on a 401k that you can make? The answer is yes. So you got to have other revenue sources that's going to print money for you. When you go to work, you're exchanging your time for revenue. So that means that you got to be there. And if you can't work anymore, there's no more money coming in. Where's the money going to come from? So that's the reason why you're going to set up this small business, get it to where it's starting to print money. So here's the 5 pillars, okay? The real estate or the business prints the money, okay? That's real estate, number 1. So this is the 5 pillars of generational wealth. Number 1 is real estate or a business. Number 2 is a corporate structure. So the real estate prints the money, the corporate, and lowers your taxable income. The corporate structure unlocks your ability. That's number 2. That's the second pillar, is corporation. Unlocks the corporation, lowers your taxable income because Uncle Sam favors people who own businesses. And that unlocks your ability to invest in those contribution and pension plans. The IRAs that I talked to you guys about, the SEP IRA, which was $68,000, the defined benefit plan, which is $285,000. So that lowers your taxable income. Okay. So 1, 2, and 3 of the pillars is real estate, business. Okay. Number 2 is corporate structure, which is business also. And then number 3 is contribution and pension plans. Number 4 is going to be life insurance policies. Life insurance policies you can borrow against, and it transfers wealth. And then the 5th and final one is going to be your trust. That's how you're going to transfer the asset from one person to another. All right. Those are the 5 pillars. You got to have those 5. Okay. Real estate, corporate structure, real estate, business, corporate structure. Okay. Contribution and pension plans, life insurance policies, and a trust. That's how you build wealth, guys. Those are the 5 essential things that you guys need. And that's the reason why, that's the flow chart of why. One, you cannot have one without the other. You're setting up the plan so you can do what? You set up the corporation, you set up the line of credit so you can do what? Leverage credit. You set up the business so you can hire people and lower your taxable income, include your family, okay? The corporation also unlocks your contribution and pension plans. I'm going to put this in the chat. Here's your homework right here. Publication. Here, I'm going to give you guys some homework, and then we're going to be done. We're going to open it up for questioning, okay? Did you guys enjoy this conversation, guys? This is the last and final reset. Anthony Glenn, guys, thank you for out on the business acumen. Today, we talked about lines of credit, but we're explaining why to get it. And the reason why we talk about these things is because you now have the information, okay? All of them work in sequential order, and you set them up the way that I talked to you guys about it, okay? You cannot mess it up, all right? We talked about business lines of credit. We talked about how to get lines of credit. We talked about the admin in your credit. We talked about the amortization schedule. We talked about credit, collateral, and capital. We talked about the 4 essential people that you need in your business. Okay, what are those? Anybody, can y'all tell me who are the 4 essential people that you need in your business? See if y'all remember. Okay, that's correct. And then what is let me see if y'all remember. What does IPP stand for? Okay, okay. What does the 3 C's stand for? Credit, collateral, and capital. Okay. What are the companies that the IRS favors? Charities, corporations, and real estate owners. Okay. Okay. What are the types of companies that you should set up? What type of companies should they be though, and why? What the banks like? What? Correct. Okay. All right. And then somebody give me the components of a business plan. Give me a couple of components to a business plan. So what's in the business account? What's in? That's correct. Okay, so guys, what I'm going to do is I'm going to put the Facebook link again. Okay, Let me copy this. I'm going to put the Facebook link again. Join the Facebook group, guys. Get in there. And I will have the replays in the Facebook group. And then also, I'm going to give you the free business plan template, guys. All you got to do is write it. Start with your plan. Your plan is going to translate you into, if you took notes today, after you write the business plan, it's going to be like, it's going to all click together. Because when you're writing the business plan in sequential order and you're building your business line of credit, your business plan is going to be in complementary to your establishing your company. Okay. So as you're doing these, they're going to run in tandem with each other as you guys are building out and structuring your company. You cannot mess it up. Okay. So this is how you do it. Okay. And then let me see here. Who has questions or comments about today's topics? Yes. So her question was, how important it is to write off everything. You want to? Okay. So here's a question. Would you rather buy a G wagon for $350,000 and then that wagon depreciates because you want to look cool, or do you want to get a $350,000 property and then depreciate it because it prints money? Which one makes more sense? Why? Because it prints what? What does the property do if there's a tenant in there? It prints what? It prints money, okay? It prints revenue. That G Wagon doesn't do anything but give you a tax write off and make you look cool. The real estate gives you the ability to depreciate the asset over a 27 and a half year. Let me give you guys an example real quick, okay? And then I'm gonna give you a couple of more things so you guys can get an example. Okay, so right now the useful, let's just say that a single family home that you purchased and you bought it for a rental property. And then the property was at 300. Let's just say the property was at 350,000, because that's around about how much a G wagon costs, right? So, or a Cullinan. Let's just say a Range Rover. A Cullinan, right? Now, take $350,000 and then divide by 27.5. Somebody give me what that number is. Help me out. $350,000 divided by 27.5. That gives me a tax write-off of $12,727.27. So I get a tax credit. I get a tax write-off for depreciation of $12,000 to $12,727. Okay, that G Wagon payment at $350,000 is probably going to be around actually more than that. So I get this deduction every single year, and the property is printing money for me, and the interest, the mortgage interest, is a tax deduction. The interest that the bank is charging me, which is the cost of borrowing money, is a tax write-off up to a certain amount. So that's an example of a write-off. I'll give you another example, okay? So let's just say that I wanted to buy product or something for my company, or let's just say that there's something called a balance sheet and a profit and loss. Can somebody look up a profit and loss and tell me what the definition is? Okay, I'm gonna look up one of my profit and loss statements right now. And I spent almost $60,000 on food last year for entertaining. Okay. The Augusta rule is another write-off. That means that I hold meetings at my house. Okay. I have a family meeting. All right. And my family meeting says that we're going to discuss a certain topic. Well, that's a business meeting. I have a big house. To rent my property for one day is around $12,000. okay? Because I have a bunch of stuff, and it's equivalent to a Airbnb, not an Airbnb, but for to have an infinity pool, a pizza oven, a basketball court, a pickleball court, an outdoor bathroom, and 2.5 acres of fruit groves. It will to rent an Airbnb out like this or rent a business or something like this out like this will cost around $12,000. So what I do is I have business meetings at my house, and then I invoice uh, my company utilizing the Augusta rule for renting my property out, and my company pays me uh, money to rent my personal residence. That's called the Augusta rule. I can do that up to 14 days. So what's 10 times 14? $10,000 times 14. Right. 140 grand. So that's a write-off, right? Here's another example. Okay. So right here, I have, let's see here, taxes, boom. Right here, I have a document in here where it says my kid works in my company. And Yoli, do you have children? Okay, so right here I have a W-2 for my kid, and I paid Carson and Anthony, my 2 chicken nuggets that I have, $14,000 for marketing my company. Well, that $14,000 will be deducted from my profit, which is all the money that I have coming in, and the loss is my expenses, and that's a write-off. So I flow the money to my kids, and then my kids pay. Now, for those of you who are paying child support, yes, let me give y'all some gangster stuff real quick. You're gonna like this. All right. Now, let's just say that Fashawn pays child support. Okay. Fashawn, I'm picking on you, man, because this is a good one. You're gonna like this one. Okay. Fashawn pays child support. Okay. Fashawn is ordered to pay child support in the amount of, I don't know, $1,200 a month. Okay. That child support documentation says that you are ordered here to pay this amount of money to X kid for X kid. Well, why not have oh yeah, here it is right here. Okay. Can you guys, I got a document that I'm gonna show you guys. So why not put your kid as a member in your company, or put your ex as a member in your company? She has no rights. And then pay that child support from your business as her being a member in your company. Did y'all hear what I just said? So instead of you paying, because when it comes out of your personal income, then it's not, I mean, you're still gonna have to pay taxes on that earned income. But if you have it as an expense, like if I had to pay $24,000 in child support a year, then I would just, it doesn't matter how she gets that money as long as you're paying your child support on time. So that $24,000 now becomes a taxable, it becomes an expense because it's a distribution to a member in your consulting company. Man, did I hear a question? Okay. All right. So put a 1 in the chat if you guys got that. So there's a bunch of examples. Now here. Okay, now I'm going to show you guys something, but I had to block out. I want everybody to click the link above my head and go to my YouTube. I got to show you guys something real quick, okay? And I want y'all to tell me what you see. You could stay out, you could stay on mute, but stay off, but I got to block out some stuff so you guys don't see the personal information on here. Okay. All right, so I'm going to show you guys something so y'all can know. Okay, but I got to block out some stuff real quick. All right, so now I'm going to show you guys something on, and it's going to tie everything in. Okay, all right, Here we go. Can y'all see? Can y'all see my camera? What does it say? Right here. Can y'all see my hand? What company does it say? Hold on, let me make sure my son's stuff. It's not showing. Okay. What does it say right? What does it say at the top? The Glenn Group Inc., right? How much did I pay my son last year? Can you see it? How much? What does it say, guys? Click the link above my head. Click the link, the winning podcast. Click. What does it say? $12,000. Okay. So when I'm telling you guys this stuff, that it can be done, that's Anthony Glenn III. That's my son's W-2. I just showed it to you guys. Okay. My kids get paid through my company. That goes down as an expense. Now, why am I paying out of my personal pocket for private school? I pay them, they pay their own private school. Right? It's coming out of their account. So now private schools is now if I pay them the money, once they get the money, they can do what they want to do with it. So now they're paying for their own private school through my business. Y'all didn't catch that. That's a bar right there, y'all. Y'all hear what I just said? Okay, so that's the reason why the money goes into, remember, here's the flow of the money. Tenant lives in one of their properties, Section 8. The money goes into the LLC. The LLC then pays the members in the LLC. Who are the members in the LLC, y'all? Who? Kids and my mom, right? The money goes into the LLC. Then when the money comes into the LLC, it goes out of the LLC because the LLC S Corp is a pass-through entity. That means money goes through there. It gets filtered. The expenses get paid. Payroll gets paid. That's an expense to the company. Once it goes into my child's account, I can pay whatever I want to. They can pay whatever they want to. So the private school with the money that goes through the business gets paid from my company. Now, if I had the money, if I was just paying for a private school through my company, that's not an event. But once it goes in through the LLC to my kids' account, I can do whatever I want to with that money. They can do whatever they want to with the money, not me. They can. So they want to go to private school? Yeah, sure. But guess what? They pay for the private school. Who has questions, guys? What's the next question? I got time for, I got like 8 minutes to answer any questions, guys. Who has questions? Yes. Yeah. I have an answer, my friend. Okay, so your question is, does a hard money lender, first, let me tell you the difference between a hard money lender and a private money lender, okay? Oh, and by the way, guys, listen to me. None of this stuff that I said is this is for informational only. This is not, I'm not a licensed financial planner. I am a real estate broker and entrepreneur. So everything that I said, I utilize the IRS codes for you guys to do this, but make sure that you're talking to a tax professional to make sure you're structured correctly, and make sure you do your due diligence with a licensed professional that's going to give you information. The only person that is qualified to give you advice on how to structure everything is the homeboy. So if y'all get sued, you know what I'm saying? The money is gonna, the money's gonna come from oh man, I'm messing around. But guys, listen, hard money loans basically means that it's hard means fast. Everybody put hard and fast. Hard money means it's from a lending institution that lend you money. Private money is from a corporation. I could be a corporation and lend you money. Now, in regard to people that are looking at your business line of credit, okay, when you're doing a hard money loan, depending on what company you're getting it for, they're going to check your personal credit for hard money loans, unless your company is actually trying to get the money. If your company is trying to get the money, they're going to look at your line of credit. But then also sometimes will check your personal credit as well. It It depends if you're going on a personal guarantee or a non-personal guarantee, like Fashawn said earlier. Okay, and hit me up. Okay. Okay, no doubt, no doubt. Who else has questions? Next question. Yes. Now, how many shares do I have to homeboy? I need 5 more shares. I told you I'll show y'all the money. Remember, if y'all, I told y'all if y'all got me to 50 shares, I'll show you the money, guys. I'll show you the. Go ahead, go ahead, go ahead. Welcome. What's your kid's name? Hi, Nala. How old is Nala? She's doing exactly. See. Oh my. Okay, so listen, man. You know what? Welcome. I'm gonna tell you something. Now I'm gonna ask you a hard question. Is that okay? Is the fear of getting a is the fear or the reservedness bigger than the love that you have for that little chicken nugget that you just had on there? Which one is bigger? Is it more important to start a business and get it going, or do the love that you have for that little person, is that bigger than your fear or reservations in starting a business? Which one's bigger? You understand my question? Welcome, welcome. Can you hear me? Your love for your daughter is way bigger, right? It doesn't it doesn't matter where your business is. It doesn't matter if you don't have a business. It doesn't matter if you're on ground zero. Once you figure out who you're doing it for, nothing is above that. I'm pretty sure there's something that you do very, very well, and there's an idea that you have that you want to provide for that little girl. So it doesn't, if you don't have where to start at is to write the business plan. That's where and it's a good and when we're talking about this stuff, if you don't have a business line of credit and you have a small business, my suggestion is to start at ground one. Even if you have a business, write your plan, right? Because your plan is and your plan with the information that you learned today is going to help you scale it. Now I have a trick question for you guys, right? If I wanted to make $1 million and I had a product I had a product that was worth $5,000, how much product do I need to sell in order to make $1 million? $5,000 product. I want $1 million company. How much product do I need to sell to make $1 million? How many customers do I need? 200. Wrong. Nope. Nope. If I want to make $1 million and I had a $5,000 product, how many customers do I need? It's a how many customers do I need? Okay. All right. So now here's what I want y'all to do. Somebody give me a calculator, and then we're gonna work through this real quick. So okay. All right. So now watch this. Okay. All right. $1 million divided by 5,000. What number do I have? Yeah, yeah. Just watch. I said, how many customers do I need? Okay, watch this. So 1 million divided by 5,000 is what? 100 divided by 5. I need 40 customers to tell, I need 40 customers to buy my product 5 times. Or I need 40 customers, or I need 40 customers. I need 40 customers to tell more people about my business, to tell 5 more people about the product. See, everybody's thinking about when you're doing business, you don't think about business. And this is the reason why you guys got to have a plan. Put a one in the chat if you guys got that nugget. I want to make sure y'all got that. I said, how many customers do you need? You don't need to go out and find new customers. You need either repeat customers or you need people raving about your product. Retention. What did I tell y'all was in the business plan? Retention strategy. That's why it's important to write the plan out. You don't need to go out and find 200 customers. You need 40 people either retransacting with you guys again, or you don't need to be the best business. You need to be the best efficient business. You need to be the loudest business. The best known business is always going to beat the best. You can have the best macaroni and cheese, you can have the best wig, you can have the best everything, but you limit yourself because nobody can find you. It's not about being the best, it's about being the most efficient and the best known. What is your product going to, how are you going to deliver this product from A to B the quickest? And how can I get you to, how can I retain you as a customer? Because most small businesses are A to B. You get the product, they buy the product. They enjoy the product, nobody knows about it. Now watch how easy this is. Fashawn has I don't know, a food truck. Fashawn delivers the food. Fashawn decides to put the QR code on the for everybody who takes a selfie and posts it on Instagram, eating my taco, then I'm gonna give you a 25% thing, and then you have to say something that rhymes with taco. Then people are beginning to like, and you see people's personality. They don't care about the food; they care about the experience. What do people complain about with businesses? Mostly customer service. It's about the delivery of the product and how efficient it is. Now, obviously, if it's food, it needs to be good, right? But if you think about it, how can you deliver your product the fastest from point A to point B? That's why it's important to write your business plan to scale. So as we're discussing these things, man, and then we're going through these things, establish your business with a plan first. That's the first thing that you should do. You should not start a business without the foundation. Now, go ahead. I'm gonna close out, but go ahead, Fashawn. I'm gonna close out, guys. Go ahead. Oh yeah, go ahead, bro. Mhm. And then I wanted to show you guys this. Are we at 50 shares now? Okay, so guys, look, click Carson, come here, baby. Anthony, Carson. I'm gonna bring my daughter in here. Sorry if I'm yelling, y'all. The reason why I wanted to show you this is because, okay, so I want you guys to put publication 560 in the IRS code. Okay, publication 560 IRS. Come here, chicken nugget. Okay, sit down. All right, my daughter is here. What did we do today?
We ran
Okay, what do we have later on today? A business what?
meeting.
Okay, tell me, so what are the components? How do we open up the business meeting?
We
Look at the camera.
we print out this sheet, like a minutes document.
Mm-hmm. Yep.
What do you mean, like open up the meeting?
Yeah, go ahead. Go ahead.
Oh, the chair is the person who starts the meeting,
Mm-hmm.
and who's the boss of the meeting,
Uh-huh.
and the
Do you like being the
attendees-
boss?
Yeah,
Okay, keep going.
and the attendees are the people who attend the meeting.
You gotta talk in the mic, baby, and look right there. Go ahead.
And what else? The
How do you open the meeting?
you what do you mean?
How do you open it? You gotta take roll call?
You take roll call
Uh-huh.
with the chair people. So if the person is not here, then you cross them out on the minutes document.
Uh-huh.
We write the where it's gonna be, when it's gonna be,
Uh-huh.
and the business name on the minutes document.
Yep.
And then at the end of this meeting, you say this meeting was adjourned or
Yep, adjourned. That's correct.
at whatever time it was.
That's correct. And then let me ask you a question. What was the last couple of meetings that we had? Did we do public speaking?
Yeah.
What do you remember from that?
I remember persuasive speaking.
Yep. Okay.
Um,
And give me an example of persuasive speaking.
do I say it or
Yeah, just
when
say
you're
it. Give me an example.
when you want to when you're trying to get someone to do something or to buy something
That's-
or a product.
Okay. And then tell me about the 3 protections. If I wrote a book, how can I protect it?
A copyright.
Give me the difference between the 3.
Copyright is a protection of something you wrote. A trademark is a protection of a logo or emblem, and a patent is a protection of something that you invented or designed.
Okay. Tell me the 3 credit bureaus and why they're important, what they are.
One is TransUnion, Equifax, and Experian, and they're basically companies of this FICO score. And a FICO score is a 3-digit number that basically tells someone how trustworthy you are to pay off your debt. So the higher it is, the better.
And where your property is located at?
Florida and Texas.
Okay, get out of here, chicken nugget. Love you. Okay, how old are you? How old? Okay, so guys, listen, man. Look, if a 12-year-old little girl can do this stuff, then we don't have any excuses. Because listen, if I can teach it the way that they can pick it up, if you apply, I promise you guys, if you apply these principles that we talked about today, you cannot mess it up. Okay, and I'm gonna show you guys, and I'm gonna go to my brother Stack Pack, right? Because you know, here it is. If you click on my link above, you will see the revenue coming in. Here it is right here. That's on my iPad. You could see the revenue. This is my child's property at $97,821 in an account. This is not in a regular checking account. This is in an investment account. So when I get the money, I don't put it in a regular account. I put it in accounts that grow, right? So anytime I do anything with my kids or I put money in, what do they need money for? Okay. I take the money and then I invest it. Look at the return on one of those accounts. Okay. Click the link up on my head. You'll see on the YouTube channel. Okay. You'll be able to see it. Okay. So you'll see that on this live right here, you will see that $30,000 the 49. Remember, you'll never make money investing, saving it. What is the fund, the principal balance? 31,000 invested. I've earned $28 off of that investment. So that money has already grown past half. I'm at a 50% return, right? But I'm doing it early, okay? So that's my daughter's account with 90 grand in there. That's from Section 8 properties. And guess what? I only put $200 a month in that account. That's it. It's not how much you save, it's how much you invest, guys. Remember this. So as I'm talking to you guys and y'all are on stage listening to this stuff, if you follow these steps that I told you, now my daughter has a business line of credit. My daughter has a LLC. My child has a real estate, right? What am I doing? What am I setting them up for? So I'm credit, collateral, and capital. So when my daughter is 19 years old, she's got 15 years of running a business. So when she gets ready to go to school, why does she need to go to work for? Because when they get ready to go to school, what do they already have? They already got an LLC that's established. They already have credit, collateral, and capital. They already have a line of credit. They already have personal credit because they have a business. They already have income. What do they usually ask you guys when you guys finance a house? 2 years, tax what? Tax. And what did they ask you for a bank statement? 2 last month's bank what? Statements. So if they have a history of money coming in as a child, my plan for my kid is on track right now to have at 18 years old, both my kids will have right around $800,000 a piece. Right? So what does that sound like to you guys? They're going to buy property near the college campus, right? And then they're going, instead of working, watch this. Kid buys a property near the college campus. This is my plan, okay? They get ready to go to school. They buy a property near the college institution, okay? Boom. They have a 5-bedroom property. They only need the master bedroom. They have 4 rooms. If the tuition on campus is $1,500 to stay on campus, they're going to rent the rooms out for $1,200. $1,200 times 4 rooms equals $4,800, right? Times 9, they have a $50,000 business. Okay, and those kids are usually, they got 9 months at school, 3 months off, but those 3 months, typically kids will stay there. I have a property near the college institution. They have a corporation that they have this age. They have reoccurring money coming in from those rooms. Now, watch this. If I got 5 rooms, if I got a 4-bedroom, this is just a single family home. If I got a 5-bedroom property and I can put bunk beds in those rooms, or not bunk beds, but twin beds. So watch this. 1,200 times 8 equals $9,600 times 9. That's a $90,000 business right there. I already have their tuition. I already have their mortgage prepaid because I've been saving all their life. So they don't have to worry about paying the mortgage because the tenants are going to pay the mortgage. And I'm under the what? I'm under the tuition for the school. So that's my plan, right? My kids will own property near the college institution. They already have the LLC. They already have credit. They can get the loan in their name because I'm not going to have to. And then let me ask y'all a question. Will they have this? I think $90,000 a year is a head start. Now, if they move out of the property and they get a job, do they still have the property? Yes or no? So, so now they have that property infinite near the college, near the college. So now if they decide to be an engineer, they have a business, they have real estate, they have a business line of credit, they have corporate credit, and then now they have money, revenue coming into their business every single month, reoccurring. They move out of the property, now they can rent that to other students. That becomes a what? A staple. Now the rent's going to go up, and then now when they get a job, this is supplemental to them having a business. They have a piece of real estate that's printing money. So now they get a job for $100,000. They have $100,000 business. So yes, questions, comment. What's up? Yeah, 15. Well, actually, my kid, my son and daughter, I created an LLC for my son at 4, and I created a limited liability company for my daughter when she was born. So actually longer than that. So at 18 minus 3, 17, 15. Yeah, so 15 years for my son. Yeah, you good. You good. So when we're talking about these things, guys, and then if you guys enjoyed this conversation, put a one in the chat, guys, because I wanted to make sure that you picked up everything that I put down. Here's your homework again. Number one, write your business plan. I'm going to put in the Facebook. I'm going to put where you guys could get the business plan template. Number two, join the group because guys, I do these rooms all the time. Like this is nothing. Like the next rooms won't be this long, but this one was long because there was a lot of components in it, and I had to break everything down. I will do a trust room. I would do a how to underwrite properties room. I would do how to scale your business. I could do all types of stuff. Like I give these, I know how to do this stuff backwards and forwards. So when we're talking about these things, I have no problem with pouring into you as long as you pour back into me by showing me some love on Instagram and YouTube. Okay. And the reason why I feel like it's important or imperative for me to get out here and push this information out again is because I'm gonna be honest with y'all, man. When I get into spaces and I see everybody in there is doesn't look like me, and I'm the only person that um um that looks like me, I feel guilty for having this information. So I feel like it's my responsibility if I said one damn thing. Think about this. Listen, if you do one of those things, even if you just set up a limited liability company and pass it down to your kids, do you understand how much the different direction that your family can go in just by implementing one of these things? One. You get what I'm saying? One thing. So I'm gonna keep kicking it like this until you know getting you guys into getting comfortable and having the confidence to get out here and start your business. Okay. So I'm gonna yeah. Go ahead. Go ahead. Jump in. Oh, that's fantastic, man. And thank you. That's a gem. And put the Facebook group in the chat, guys. If you guys click that link, you will see that free business plan template for you guys. Hop in there, and then you will see that. And then I have some other stuff too. We'll talk about LLC structure next. We'll talk about. We'll get now. Let me put these in the chat for you guys. Publication 560 is what I want you guys to do. You're going to read that publication 560 in the IRS code. Put that in the chat right now. Publication 560 in the IRS code. That is where you get the information on these contribution and pension plans, so you can find it. Publication 560 in the IRS code. Okay, now who has questions that they want to? So write your business plan, read that pub. Yes, what you got, Vaughn? Oh, I love it. Okay, so yeah. I almost forgot. Okay, that's a good one. Okay. California, Ohio, California, Delaware, and Wyoming. Okay. Now, let me give y'all this game real quick and I'll run this down for you guys. I'll just run through this really quick because I know we're short on time. Okay. Put a one in the chat if you guys want me to break down how to do it in the documents that you need. It's quick. Okay. All right. So here's a little quick nugget. All right. Now, number one. Okay. So follow me. I'm gonna just break it down quickly. Okay. All right. So basically, you're going to do a multiple. There's two ways. You could do a single member or multi-member limited liability company. Multi-member means it's you and your kid on it. Okay. Now, single member means that they own it in severalty, which means they own it by themselves. So what I did is I created a limited liability company for my children. Okay. And then with that, I did mine. And I'm not going to tell y'all what I did. It's going to be up to y'all to figure it out. But I did mine. But what you got to have is that you have to have I set them up as a consulting company. Okay. All right. And my sons and daughters are consulting companies, and they are marketers and ambassadors. The second thing, once you set up the limited liability company, if you set it up in the state out of where you don't operate, you need something called a foreign qualification. Everybody put foreign qualification in the chat. Foreign qualification. All it is a document it's a document that says that your company is foreign to where you're operating at. That's all it is. And then they're going to give you a certificate of authority. Somebody Google foreign qualification and read it to me. Tell me what it is. I'm telling you how to set it up to where you don't get in trouble. This is what you need. You have to have these things. Somebody Google foreign qualification and read it to me, please. Please. Okay. And then somebody do, okay. What do we got? Okay. All right. So you set up the foreign qualification and then you set up a certificate of authority. Okay. Well, somebody put certificate of authority in there. Certificate of authority and read that to me. Certificate of authority. So you register for a foreign qualification. That basically means that each state operates like a different country. Just imagine that. So foreign means that it's clandestine to the laws and stuff that's to that state. So to run a company requirement in California is not going to be the same as Florida, right? So you would ask for a foreign qualification and they're going to issue you a certificate of authority, which authorizes you to do business in that state legally. Okay. And then the last one is going to be an operating agreement. Y'all better be putting this down. Put it in the chat right now. Operating agreement. Operating agreement. This is important. Operating agreement. Somebody tell me what. Yes, read operating agreement as certificate of authority, please. Whatever one you got first. Bingo. Now, here's the reason why. Now, this document right here, the operating, I mean, the operating, operating agreement is the most important document to your company. Every single company should have this document. Can anybody tell me why? Why do I need that in my company? And then this is going to be the mother of all gems right here. Why do I need an operating agreement? Okay. And what? Mitigate. What else? And disputes. So think about it. Okay, so let's just say that right now we all decided to go into a business, right? We're all this is where us we mess up at when we start businesses. Okay, all of us decide to go into business together. We decide to create the company. We make Plan B Incorporated, right? Plan B Incorporated is rocking out. Plan B Incorporated makes $1 million. Fashawn wants to cash out. How does that? We don't want him to cash out. We had an agreement that we're going to keep the money in there for 2 years before we take money out. How do you make that decision? Operating agreement. Let's just say that let's just say that Rowan, she decides that Unbelievable, she needs a loan for Unbelievable because she got sued, right? Boom, she needs money from Plan B Incorporated, right? She has a dispute because Fashawn keeps cutting her off and she wants to leave the company. How does that decision get made? Operating agreement. Let's just say that Gemini, he was in Plan B and he opened up the Kirkland brand, Plan C, right? He goes viral, okay? And then he wants to crap on Plan B, okay? What prevents him from doing that? Operating agreement, non-slander. Because you created Plan C, Jack. You know what I'm saying? Okay. Pretty much. Okay. That operating agreement is going to have who's responsible for what. It's going to have a non-disclosure agreement in there, an NDA. It's going to have a non-compete clause in there. So that means that all of the secrets that Plan B has, everybody has to sign it and notarize it. That way, if anyone decides to do Plan C, they can't do it because there's a non-compete clause in there that says if you are in Plan B, you cannot compete with Plan B with Plan C. And then, yeah, right. There's ways there, but still, but there's certain things that you can do though. I don't want to get into that, but there's okay. So now you have a non-disclosure and non-compete clause in there, right? And then you have a anti-slander agreement in there that says once Fashawn leaves Plan B, he can't start Plan C and start talking crap about Plan B, or else he could be held in account. He could be held accountable of law. And then you got an arbitration and a mediation clause. Arbitration means that you arbitrate before you mediate. Our arbitration clause basically means that I will go to arbitration before I go to court. I will meet with a mediator before going to court. So that way you can stay out of you keep your private business private. You understand why this is all important? And then you also have your tax, in your operating agreement, it's going to have your tax stuff in there, how you're going to pay out, who's going to get paid what. In the event that there's a dispute, you take a vote. All of that's going to be in your operating agreement. It is the most essential piece to starting a business, but it all goes back to writing a business what? plan. All right, guys. Woo. Did I answer your question? I love this. I love, man. Put a one in the chat if you learned something today, because I want to know if y'all learned something for real. Like, who somebody, I want to go around the room, pass the mic around. Who has questions? But I want to know, like, what did you learn today? Just quick. Let me give rapid fire education. Who learned something today? Give me one thing that you learned today that you remember. Anything. Anybody on stage or anybody in the audience? What did you learn? Or something that you learned today that was beneficial to you? Somebody puts. Oh yeah, you like that one, right? Okay, good. That's a. What else? What else? That's a big Jim Vaughn. Thank you for staying. Who else? Who else learned something today? Damn, y'all ain't learned nothing, man. You know what I'm saying? Okay, so let me tell you. Okay, so right now you're vulnerable because you have no contract. What contract? Listen, listen to me. Okay, do not do that business without having a contract in place, and your contract needs to be with your limited liability company and not with you. Okay. So you don't even need to be doing anything or any marketing or anything. Because right now, if you hold that business and your name is on it and somebody sues you and you don't have the proper insurance, they're coming after you. Okay. And also, if you go in there and you start marketing and advertising for this person, and now he's figured out your blueprint of how you're packing the house out, and you're just getting the door and everything else, who goes to say the location is more important than your marketing? So now he has a location. Your people already have that business in place. Now he could just say, you know what? Well, I don't need you to market for me because everybody knows that you do this every Tuesday, Wednesday, and Thursday, or whatever it is you do. Create a contract, write a contract up, okay? Call a person, write the contract up, okay? Have it between your limited liability company and him, and then have it in writing how you split the revenue and how long the contract is going to be for. Okay? Simple. Don't overthink it. Okay? All right. So you definitely need to have that contract in place. And you can chat GPT that, man. It's not hard. Okay. All right. Next question. Yep. P&L and balance sheet. Profit and loss. That's a good question, actually. Reasonable. A reasonable amount based off of what your house could rent for at fair market rent based off of what you're doing there. So you can't charge $20,000 a day if your property doesn't yield that. It needs to be in good flavor and yeah, yep. So that's a great question, and I'm glad you brought that up because I don't think I covered that. That's actually a really good question. So when you do that, the best way to do it is just to either call a real estate professional or look online and see, okay, what is it if you got a 3 bedroom, 2 bathroom property with a pool? then you would just see what look up an Airbnb price, and that could be a good analysis in that local area close to the zip code. So it just needs to be reasonable and fair, right? So as long as you do that, that's how you do it. That's good. I'm glad you said that. That's a good question. Anybody else? What's up, dog? Oh, fantastic, fantastic, man. And guys, listen, we break this down into nuggets, right? We have these broken down into smaller classes, right? So when I do these, we will do myself, Bruno, Ian. We'll be doing these rooms where we'll talk about okay, just LLC stuff. Then we'll talk about just corporate structure stuff. Then we'll talk about different things. The business line of credit one is a big one because there's so many components to it. But we wanted to make sure that you guys got a sequential order on how to do it the correct way. Any other questions or comments that you guys have today? Anybody else? No, I did not cover home equity lines of credit. Uh, I did not cover home equity line of credit because that's kind of like in the real estate investment side. But a home equity, I'll just cover it real quick. A home equity line of credit is a credit against your the equity position in your house. All equity is the difference between what you owe on your house and what your house is worth. So if you owe 300,000 on your house, okay, uh, if you owe 300,000 on your house and you wanted to uh, and your house is worth 500,000, you have 200,000 equity, and you can take a home equity line of credit against that, and it could be revolving or installment on a payback period, and it's like a credit card against your house that you can utilize it for anything. So it can be used to structure to start a business. But if you have equity in your property and you want to start a small business, why are you calling the bank to get a loan when you can use your equity position, right? So yeah. Um, who else has questions? Yes, yes, and Yes, for sure, guys. So yeah, yeah, I can hear you, brother. But oh, that's a great question. Okay, so what is the maximum amount of rental increase? It depends on the state. It just depends. Okay, so I'd have to look that up for you and then apply that. But here's what I'm going to tell you. One thing I'm going to have to research that because I'm not in the state of New York, but I do own property, uh, not in New York, but around there, so I can research that. I'm never going to give you advice on something that I'm not doing myself, bro. So I can definitely research that and find out because some states have rental regulations but it's from state to state. But I can reach out to people and figure this out. But I will tell y'all this though. Listen to this. If I raise the rent on a single family home, I want y'all to put I want everybody to put this in here, and I want you guys to remember this. Okay, I want y'all to put vacancy loss in the chat. Vacancy loss. Okay, let me give you guys an example. If I have a single family home and I wanted to raise the rent $100, okay, and then thank you. I wanted to raise the rent $100, and I wanted to times 12 months. How much is that? $1,200, right? That's on a single family home. Now, if a person wanted to move out of that space, I can't get any rent, right? That means that I'm going to have vacancy loss because I have turnover in tenants. Now, if I raise the rent $75 on a fourplex, that's $300 of income. If I multiply that times 12, that's $3,600 on a multifamily, right? So I like multifamily because you have less vacancy loss because I can raise the rent less on a multifamily and make more money in the long run that I would be able to do with a single family home. And then plus, if I have to evict one tenant out of a fourplex, I still have tenant 2, 3, and 4 that I'm making revenue from. So you have less risk with a multifamily than you do a single family home. But I would definitely research that to see if there was any rental caps for that. And I'll tell you this though, I'm gonna give you another nugget too, Blade, because you asked a real estate question. Get the property in the trust and have the corporation run the rental business, because now you have two forms of protection that protects you from the put the property in a trust, entitle it in a trust, and then have a company, your corporation, have your tenants paying a limited liability company. Here's why. If the revenue comes in, the revenue comes into the LLC. You build in business, you build in credit, collateral, and capital. And then when you have the bank is going to look at you, and if you follow these steps that we put in the chat and today with the business lines of credit, then when the money is coming in into the limited liability company, you have reoccurring money coming in from rental income. So the bank is going to look at that, and then they're going to see that you are a good, what type of company did I tell you guys to set up? Consulting company. So now you can buy more real estate with your LLC versus you using your personal income. Yes. Yes. Listen, that's good. The most important thing is getting your company known, guys. So when you set up your corporation, don't be a secret company, right? You establish your limited liability company, set up your administrative part that I said here. It's very, very critical because even if it's a small business or whatever, your company needs to be findable, guys. So the more so you can have the most powerful company on the planet, and you might have this grandiose idea, but if nobody knows you, the bank's not going to lend money to you. So the best is always going to beat the best known is always going to beat the best. So the person, and here's an example. If I say McDonald's, what's the first place? If I say, let's say, if I say basketball, who's the first person that comes to mind? Jordan. Okay. Michael Jordan make the best shoes or no? Michael Jordan makes, Mike, watch this. This is what Stack is talking about. Michael Jordan makes the best known shoe. He makes the best shoe. And it goes back to those four economical things that create value: scarcity, transferability, utility, and demand. So what Michael Jordan does is since he's the best known shoe, is that It's a lifestyle. People don't wear Jordans because they are orthopedic, right? I mean, shoes. They're not mall walkers, right? So he makes those shoes. He makes 5,000 of them, and 50 million people want them. Therefore, driving the demand up. So you pay more. It's not that he doesn't. Now, Michael Jordan easily, Nike can easily make. How many times have y'all said, put a one in the chat if you saw brand new drops come out and then you can't find them anywhere? They do that on purpose. So think about it. Nike. So think about this. Nike knows that they have the ability to manufacture those shoes to meet the demand, but they do that on purpose to keep the value up. Think about that. That's a bar that you said. That's a bar that you said. I hope y'all didn't miss that, right? So the best. Listen, when I say cheeseburger, what's the first place that comes to mind? Why? They're the best known, guys. So if you are the best known, if you're the biggest person when you establish your brand or whatever it is, whatever type of business that you're establishing, make sure you set that business up to where people can find it and they're talking about it. That's how you can get to the $1 million. You don't need 200 customers. You need 40 people referring 5 people to your business. That's an easier feat. So when you guys are establishing your business out, make sure that you're the best known business versus the best. Go ahead. Yes. Hell no. But Sean, listen, this is what we gonna do. This is what we gonna do. Check this out. We gotta leave some meat on the bone, man. Here's the deal, guys. Listen, if you want Fashawn, myself, Stack Pack, all of us to do a room on structure, put a one in the chat. Okay? Put a one in the chat if you guys want us to rock out with that one. Because that's probably the next one that we'll do is what a holding company is, what a trust is, how to do all of that stuff, how to set up a trust, and all of that, right? We'll talk about that. And then um the homeboy, can you do the final reset? Because I want to go grab something real quick out of my safe. Is that okay? Yeah, we trust stuff. I'm gonna go grab something out of my safe. And I want to read to you guys. Okay, so put a one in the chat. The homeboy, can you do a reset? Back, back, Jack. All right, man. Man, put a fire emoji in the chat if you guys like this room today, man. Because look, man, I'm gonna tell you, man, it's exciting for me to be able to do this, and I'm gonna share something with y'all, man. Real quick that I didn't talk about. Uh, when I first started the business, man, I'm gonna tell y'all something, man. Like when I first started it was people telling me that I should not be doing this business. People were actually telling me you shouldn't be doing you. Why are you doing this business? People were actually telling me that I shouldn't start these businesses, right? If I would have listened to those people, I don't even know where I would be at, man, to be honest with you. So listen, man, make sure that you got good people around you that's going to, encourage you and put you in the right position to win, man, because there's a lot of people who want to see you fail. And a lot of people will project their fears upon you too, right? Like, you know, you want to ask, you want to find out who your friends are, ask them to support your business, right? But I'm gonna tell you, you get to the big money once you guys start partnering with people, man. So make sure you get in alignment with people that can help you build. Come here, son.
I'm playing basketball.
Okay, Chicken Nugget. I want you to talk about a trust. Give me the breakdown of a trust real quick. Come here, right here, right here.
I think I forgot.
Yeah, right.
I'm just kidding. Trust is a protection of the transfer of assets from a trust or a trustee. It protects your assets that you're trying to give to an heir from being contested into probate. And probate is another word for court. And to get your assets contested into probate, if you don't want them stolen, you'd have to have an attorney or a lawyer, which does cost a lot of money. So basically, you just be losing more and more assets with a will.
Okay. Right out, Jack. All right. Thank you. All right. The kid is crazy, man. I want to read one thing. I want to read one thing, and this is gonna tie everything in a nice little bow for you guys. Notwithstanding the foregoing as to Anthony Glenn III and Carson Taylor Glenn, if they are legally married at the date of death of the settlor or become married prior to attaining age 35, the trustee is directed to withhold. Now, the trustee is my holding company, okay? And I have a holding company, and that's who the trustee of my assets are. The trustee receives the everything, and that's the board of trustees. Basically, they're making decisions on behalf of my business. Now it says right here, the trustee is the director to withhold any and all distribution of assets to them unless a prenuptial agreement or postnuptial agreement has been executed by said child and spouse directing that all assets received from this trust shall retain in its character as a separate property. What does that mean? What does that mean? What does that mean that I just read? What does that mean? What does that mean, guys? Let me rewind this and read it for you guys. Y'all gonna like this. Notwithstanding the foregoing and as to Anthony Glenn III and Carson Taylor Glenn, if they are legally married at the date of death of the settlor or becomes married prior to attaining age 35, okay, the trustee is directed to withhold any and all distribution of assets to them unless a prenuptial agreement or postnuptial agreement has been executed by said child and spouse, directing that all assets get no money. What I just did. Yep. That means that guess what? That means that look, whatever my kids built, okay, whatever my kids want to do, whatever money that they make, that's cool. But guess what? Okay, Keisha is not entitled to anything that I have built for my family legacy. Okay, so that means that hey, if you want to, okay, you want to marry my son, you marry my son because you love him, not because he's a trust fund child. And if you want to go start unbelievable, you can do it on your own dime, not my kid's dime, not my money. Let me read let me read something else out of here. Distribution of principal. If the beneficiary has graduated from an accelerated university college with at least a 4-year baccalaureate degree prior to attaining age 25, the trustee shall distribute 25% of the principal of the beneficiary's trust and attain 25% of the balance of the principal beneficiary in the child's education account. If the beneficiary has not graduated from an accredited university or college with at least a 4-year baccalaureate degree, then the trustee shall distribute 25% of then principal of the beneficiary trust to the grandchildren, and the entire balance of the trust shall remain in the beneficiary's trustee's account. So what does that mean? That you didn't, right? Yep. Bingo. Okay. No trust. Upon death of the settlor, the trustee shall first dispute a cash bequest of $500,000 to the Veteran Homeowners Club, which is my nonprofit. Next to the Board of Trustees, $2.5 million. And then I have it in sequential order where I'm giving money to, right? But the principal balance of the trust will never be depleted. Do you know why? Because there's always going to be money accruing interest. Right. So now in here, I also have a life insurance policy that basically pays off debt. So in here it says the beneficiary has graduated from a credit university for at least 4 years. I've already read that one. Okay, let me see here. That. Okay, so right here, let me see. I have a successor trustee. It says in the event that I'm telling y'all, man, I know this stuff, bro. Like one day we gonna get in here and we'll do this room because I think this is a big one, right? So Yeah, so basically, look, my life insurance policies are not giving my kids $1 million, right? Or 5 or $10 million. My life insurance policies are going to pay off my business debt and they're going to pay off my real estate. So my policies are written in such to where my uh the life insurance policies will pay off the debt, and then my kids will inherit real estate and businesses with no debt. So what does that sound like to y'all? A what? Starts with a B. B. Starts, nope, starts with a B. Bravo Alpha November Kilo. Bing. There it is. So the benefit of trust is, so that means that when my life insurance policy, when I die, instead of giving my kids a lump sum of, $10 million, all of the policies or whatever, the life insurance policies are going to pay off the due IPP payment. What's that? A principal, a payment to pay off all of my debt. Yeah. But see, this they don't teach you about that stuff though, right? Is the how to properly set it up, right? So, like, oh, right here, hereby amends. Okay, retirement interest. The section applies to respect to retirement interest. Supersedes declaration. A retirement account means plans for 401k, annuities, and arrangements of the IRS code. Withdrawal requirements. Each year, beginning at each year, the owner participant debt, the trustee shall withdraw from any retirement account any corresponding retirement interest that needs to be paid. So my kids don't even have to worry about getting it back taxes or anything else, because the money's going to come out of all of the stuff that's already in here. So the way that I have it in here is that if they got to go to the board of trustees uh, uh, to ask for money. There's money set aside for wedding. There's money set aside for undergrad and grad. There's money set aside to buy a house. And then after that, there's money in here in my holding company to pay the attorneys and all of that stuff. So everything is in here, man. It's just bulletproof. There's nothing. Everything is in here and it's set to where who's gonna run. Because right now, guys, listen. You got a house right now. Let's go. Okay. Matter of fact, let's go ahead and wrap this up, man, because we've been going for a long time. I'm not gonna get into the next one. Okay. So yes, yes. Hey guys, listen. Do me a favor, please. Can you click the link above my head if you enjoyed what I talked about today? I would really appreciate if you guys could subscribe to the YouTube channel and put what you have learned today. And I will be back, guys. And then the rooms will be shorter. We'll regulate the rooms to no longer than an hour and a half. Okay, tops. Okay. This room right here was the room that I had set aside. Oh, Los is in the building. Shout out to Los Callahan, bro. Listen, a lot of this stuff, some of this stuff that I talked about today was learned from him. He helped me set up a lot of this stuff. So make sure you guys give him a follow. I always give credit where credit is due. Okay, so some of this stuff. What's up, man? What's up, brother? I hate that you missed it, but he does rooms for business lines of credit every Friday on Clubhouse. I wanted to make sure you guys give him a follow too, because he tightened me up a lot, and I put a video on there. So a lot of this stuff I did, a lot of nuggets I already knew, but a lot of stuff I got from following some of his footsteps. And guess what I've done? I always hit him up and ask him for advice, and I'm saying that publicly. I hit them up all the time. So when you find people, I hit up Stack Pack and ask him about stuff, about all types of stuff. So when you guys are doing these things and you're implementing these steps, just make sure that you are following the steps. I broke everything down step by step on how you can get there. Okay. All right. Any questions before we shut down? Yes. I got to look at it, man, and do the math. All right. Thank you guys. I appreciate everything. We went over a lot of stuff too. Corporate structure setup. We talked about trust. We talked about the wave tops of the steps on how I got established my business, the administrative portion of everything, and then everything else in there. Okay. So again, guys, if you guys want to give me a follow, make sure you subscribe to the YouTube channel. Okay. And then also if you guys want to build, we'll be doing another room where we'll be talking about trust and limited liability companies next. Okay. So make sure you guys hit the YouTube channel above my head and pull up. And then also, what else? Show some love, man. I'm going to put my Google profile in the chat, guys, so you guys can leave a positive Google review. And then set the notification bell on when we do these spaces. I'll come in. The homeboy, thank you for inviting me. I appreciate it. And then we will rock out on the next one. Any other questions or comments that you guys would like to add, or any questions that you have before we Absolutely. I appreciate you guys. All right, guys. So remember, the homeboy will be setting up another platform to where we can rock out again. And then again, remember, TonyGlennII.com. That's the Facebook group. Win in Real Estate is the group. But as we said before, guys, these are things that we will share with you guys. Everything that I have learned in all of these spaces in regard to starting and establishing a business, and then also how to establish your business so you guys could get funding, get government contracts. That's what we're going to talk about next. And then we'll talk about the trust setup next. Okay. All right. Thank you guys for pulling up. We appreciate you. Later.